Hey folks, good evening. Welcome to another morning space with me, Kalu Aja. On this space, we're talking the economy, money, and of course, personal finance. We want to make those topics really easy for you to understand. And so every week we bring in a great guest. So we talk amongst ourselves. We want to learn, we want to get better at this thing called money, policy, and of course, strategy. This week we're talking macroeconomics, right? Those indicators, those things that we hear about, unemployment, GDP growth, inflation, those key variables that tell us how the economy is doing. That's what we want to talk about this week, right? So I have a great economist is going to join us and just take us through that entire picture for Nigeria, where we are so far. And I've tried to put the question, green or red or perhaps yellow, the idea is, when you get to a traffic stop, there's a green sign or green light, which tells you can go, right? You're clear to go. Red means you got to stop, readjust, see what you're doing right, what you're doing wrong, and then perhaps you move. Yellow essentially is you're in between go and stop, and it's telling you to get ready to go or stop, more or less. But that's what we want to talk about. Where is the Nigerian economy right now in terms of the macroeconomics of it? And you don't need to be, everyone has got an opinion. I think it was two or 3 weeks ago, we had the former or the current president of the African Development Bank, Adesina. He used to be a minister in Nigeria, Minister of Agriculture. Wonderful guy. And he had said in the statement that the GDP per capita, what it was still the GDP per capita of Nigeria today, 2025, is lower than what it was, in the 1960s or so. In essence, he was saying Nigeria has retrogressed or has stunted growth. So we've gone up and we've come back down, and when we find ourselves on a GDP per capita level, it's essentially where we were in the 1960s. If you look at the data, he's not far off. Nigeria's highest ever GDP per capita was in 2014. That's the period Nigeria had its highest ever GDP per capita. Since then, we've gone down a bit, right? We've gone down a bit in terms of GDP per capita. Many reasons why. And in Nigeria's case, it's two big reasons. Number one, our GDP has collapsed. In 2014, we're approaching $500 billion GDP number, nominal. Approaching 500 billion nominal GDP in 2014. Now we are really below 200 billion. So from nearly 500 to below 200. But the population has kept on growing. Nigeria has a population growth about, give or take, about 2.93%. That 3% is a constant. It just keeps on growing. So that just tells you that every year the population of Nigeria increases. But the GDP does not keep pace with the population growth. So if you then divide that GDP pie, by the raw numbers, clearly you would then see that the GDP per capita will go down because Nigeria has got to grow at least 3% every year. At least. Once we grow at 3% every year, we're not actually growing. We're just maintaining population. We're just keeping up with population. Right? So it's like if you've got 3 kids at home, if you're going to buy yams, you have to first of all buy yams for the 3 of them, first of all, before you talk about growing your pantry or expanding your food supply. So Nigeria's got to grow at least 3% year on year before we even talk around we want to grow this GDP. And that's the problem with Nigeria, that Nigeria is really not growing. If you look at where we are right now, in whichever number you want to pick up, Nigeria is growing about 3%, 4%, right? So that just tells you where we are. That's why there's lots of unemployment, because even when the GDP grows, the first topic is that GDP growth then contributing to creating jobs in the economy for the young people. Look at the demographics of Nigeria. We have very few older people. The bulk of Nigerians are very young, from 13 years old to 5 years old. That's the bulk of Nigerians, which means the bulk of the population need jobs. So if your GDP is not growing and your wages are not growing, they are not creating jobs for the bulk of that population. And if that population does not have jobs, then they cannot consume. And the lack of consumption really is the problem in Nigeria because we're not consuming. Then companies have to leave Nigeria. The multinationals are leaving because there's no one buying their products. And no one can wake up today and go buy a bag of rice casually. Maybe your kid had a good result, you just want to go buy a bag of rice. No one can casually do that. You have to plan to buy a bag of rice and all that kind of stuff. So lack of consumption, high inflation, low GDP per capita. These are all the macroeconomic indicators that I would like our guests to speak around. I see him here, but so if you want to request to speak, I'll send you to invite. Once you hop in, we can do it. They'll just welcome you in, and then we can take it from there. They also welcome into the discussion as well. So, guys, that's what I want to talk about. I want to give you guys, so you guys leave with an understanding of where Nigeria is again, right, or where we are essentially. I think it was last space I did, not my space, but I was on that space, and I tried to explain to those folks again about the budget and the issues with the budget of 2025. And I'll get into it with my guest. But he's here now. I think he can speak. So let me introduce Dr. Wilson. Doctor, I hope I can call you Doctor now because I know you've been a doctor already. Doctor, you want to unmute, just sort of give us a brief introduction, and then I have my questions, sir, before I turn it over to the audience.
Yeah, thank you, Carlo. Just if you can confirm if you can hear me.
I can, sir. Thank you so much for being here.
Yeah, it's a pleasure to be here. And my name is Wilson Erumebo. I'm a senior economist at the Nigerian Economic Summit Group, where I lead the work on economic transformation and competitiveness. Basically doing research, policy advocacy. It's one thing to write the report and identify the issues, and then for us at the NESG is another thing to then engage with different policymakers to see how best can some of these issues be addressed. And of course, NESG is not a government institution, not in any way. It's owned by the private sector. If you look at the board of the NESG, we're talking of private companies, and so it's not in any way funded by. So we can engage issues from a very practical, standpoint, highlight key issues, and at the same time see how we can push for recommendations. Some of these recommendations that we make and push for implementation. On the other side, on my education level, so my PhD was on structural transformation, productivity, and employment still on Nigeria. Basically, how can Nigeria create better jobs, raise productivity, and improve income, like you mentioned in your intro. That is not just about GDP per se. You also have to find the drivers of that growth. It's the sectors that are driving that growth, and whether or not how many people contribute to, and at the same time benefit from the growth process, and yet so that's quite an interesting conversation to have.
Perfect. We're glad to have you here. So let's just jump into it. Like I gave the picture of Nigeria. So Nigeria is at the crossroads. There's a traffic light. In terms of the macroeconomic picture indicators, is the economy ready to go? Are we seeing a green light saying, hey guys, you guys are all good, step on the accelerator and move? Are we seeing the yellow line saying we have to fix a few things before you guys can go? Are we just seeing red saying just stop where you are, go fix the economy and come back to it? What are we seeing as the in terms of the Nigerian consumer now, right?
Yeah, Carlo, and as you know, with economics, it's not you can't just have green light, yellow light, and red light in every aspect of your economy, right? So there's going to be certainly mixed pictures or mixed lights, if you like. There are places or areas where there will be improvement. There are places where there is no improvement. Areas where it would sort of like be stagnant over the years. So that's one thing. Comparing where you are now with perhaps where you were a few years ago, or you can even go back to 1960. And again, another way to look at it is to compare where you are now with where you plan to be based on the government agenda itself. So for instance, as an example to that, if you go to the Ministry of Finance website, there's a document there. When this government came on board, they highlighted some of the plans, and it was clearly captured in that document that if you look at the trajectory of the country, what they said was that by 2030, Nigeria's economy will be, about $1 trillion, in terms of size. So that's a way of them saying, look, this is how we think you should judge us. And at the time, which is with 2013 or 2023, just about a few years ago, GDP was estimated around $450 billion. So today, that same GDP is under $200 billion. So you can certainly say that that's not a good, that's not progress, right? Based on the plan or the goal or the target that they've set. In fact, it's even worse off than when the government came in. So from 450 to under 200 billion. If you look at growth rates, right, in that document, it was said that the economy should grow at 7% on average per annum. Recently we're doing 3.4%. The recent outlook or projections by the IMF is saying this year we're going to grow at 3%. So there's a gap there. On that document, it says lift 100 million people out of poverty. In fact, what we've had with some of the reforms we've seen is that majority are falling into poverty. Create 50 million jobs. I'm not sure we can see that 50 million jobs. And so if you just go through that document entirely, in fact, exchange rate was projected to be around 550, 600 naira per dollar. Right now, it's 1,500 and all of that. So if you look at that, comparing our performance now with the actual targets that were set, when they came on board, a lot of things, I would say are not in line with that target. But if you then compare with the last couple of months, and you look at different areas, what you would find is there are areas where we've kind of like improved gradually, looking at things like, for instance, external reserves, where we're doing something close to 30 billion. As at now, we're, within somewhere around 38 billion or thereabout. Exchange rate. So if you look at volatility of exchange rate in the mid second half of 2023, you would see that there's a lot of volatility, even in early 2024. But now there's some level of stability in the exchange rate. Trade balance is also improving. Growth not where we should be, but still around and above 3%. So it's a mixed picture, I would say. Some on the external side, what we've seen, and if you go through some of the CBN reports, the monetary policy communique, and even some of the data, you would see that there's some relative progress on the external side in terms of trade balance, volatility in exchange rate, foreign reserves. Those are the three major areas, and also oil revenues compared to a couple of years ago when we were doing 1 million barrels per day. So now it's around 1.4 million barrels per day, slightly improving. So there's been progress in those areas. I would say some green lights here. And then on the flip side, as we all know, inflation, that's one thing that still hasn't been addressed. At least prices of goods are still very high. Price of fuel, for instance, the NBS released the monthly figures, and it was showing that I think 1 liter is still 1,200 in some places, which is not good in terms of poverty, hunger. In fact, if you go through that NBS report, one of the things they said is that 66% of Nigerian households can't eat their preferred or nutritious food in the past 30 days simply because of lack of money. I think that's a statistic that tells you that, look, hunger is still very prevalent. There's issues of food insecurity, and per capita income has decimated, over the last years with the exchange rate reforms. So these are areas of concerns. And then we can also talk more about the budget and the fact that, look, it doesn't look like much the progress that we expect to see is happening, especially on the fiscal side. Mm-hmm. So it's a mixed picture of areas of growth, and then some areas there is stagnation and in fact reversals in some of these areas.
Yeah, I hear you, sir. So when you say mixed bag, I hear you. That would be like if I had a bag of 10 balls, 5 would be green, 5 would be blue. That would be a mixed bag. But if we look at the bag itself, GDP nominal, just pure GDP, it has come down, right? GDP per capita has come down. Inflation,
yes,
it's now 23.71. Remember, we took away the 10% because of the rebates, but it's come down this month, but it's still at 23%. So we've taken away 10%, and we're still at 23%. So inflation is still high. Oil output, like you've said, we are up in quotes to 1.4, 1.5. OPEC quota is still 1.5. The budget is 2 million barrels. 2 million barrels. So I'm just bringing out the key assumptions, the key, should we say, indicators for the Nigerian economy are still either underperforming, subpar, or have not really reached that peak. So you mentioned the positives, the FX exchange rate, reserves have gone up.
Yeah.
So, but apart from that, it doesn't feel like a mixed bag. It feels like we have one or two balls in that bag that are looking okay, and the rest are just, not really performing. You've talked about consumption at the family level. Families can't feed. New York report that was out some time ago said Nigerians can't afford milk. There was calcium deficiency. There was a disease they mentioned that shows up when you don't have milk, and they were finding that in Nigeria. It's so. This is just to go back to the question of in terms of the reds and the greens and the red. It in my view, this is me speaking. It looks like the lights is in Nigeria. Stop where you are. Go fix some stuff before you move. You can't drive on the highway with 3 bad tires out of 1. The leaking carburetor with spark plugs that are not. That's what I feel the street lights is in Nigeria. So I'm not,
yes, Carlo.
yeah.
I think you're right to say that. And for me in particular, so most times when I do my work, what I tend to do sometimes is get away from the noise and really look at the long-term potential of Nigeria. I think that's even a good way to look at it. That look, even if to say we have 4,500 or thereabout megawatts of electricity, is that what Nigeria should have as a country? So if we're talking about growth, we're talking about the drivers of growth. What you'd find is that just a few, about 3-4 sectors contribute significantly to growth when we have about 19 other sectors. If we're talking about contribution to GDP, is almost the same level, contribution to employment. So you still see just a few areas contributing much of that positives. And then it just simply means that many people are being left behind, as far as the growth process is concerned. Yeah, so there are areas where I still think, particularly when you look at the economy from a structural standpoint and say, look, at what point do we start competing? At what point do we start lifting millions of people out of poverty? At what point do we start creating better jobs for the future? And as you know, I always talk about, the structural foundation of the economy, whether it's your industrial sector or your manufacturing sector, how much they contribute to employment, to GDP. Those numbers, I would say, are red. And to be honest, I don't think we've really started, that heavy lifting of reforming some of those key sectors, and that I think would lead us to the path of sustainable development.
Gotcha. Let's talk about budget. So we have the 2025 budget, and we have a lot of assumptions on that budget. Like the dollar to no the oil price, the two key assumptions that drive the Nigerian economy, the benchmark price for crude oil and the benchmark and the oil output. And of course, we have the inflation, then we have the exchange rate. So we were projecting $75 a barrel at about 2 million barrels output. Now, this is important, like you would know, because if we are able to sell 2 million barrels at 75, then our budget expenditures of 49 trillion can then be financed by borrowing the 13 trillion the budget. So we say we want to borrow 13 trillion because we're going to make revenues by selling 2 million barrels at $75 a barrel. Right now, oil price is about 65. That's $10 off 65. And like you said, we're at 1.4. Even if we are generous to say we're even at 1.8, we're not at 2 million barrels a day. So that's a huge deficit that has opened up again, which means that the spending of 47 trillion, if we continue to spend at 47 trillion, then the deficit is going to open up. The naira is going to get weaker. Bond rates have to stay high to attract people to the market and all that. So is the 2025 budget dead already in May 2025? Do we need an austerity budget, or do we need is the budget dead already?
Well, one thing I would say, I think first the figure is 55 trillion, 54.9 trillion that was signed by the president.
Okay.
So there's a lot of back and forth process, with the National Assembly and the executive in terms of the final figure. So 59 or 50, 55, 54.9 trillion. Let's also say 55 trillion naira budget. I think one of the biggest mistake, and I'd mentioned this before, this planning process started, for the budget, is that, and we always make this mistake, is that the oil benchmark price, right? We know clearly that oil is subject to volatility. Many people knew that, Trump, you would have that he favors lower oil prices, and that's certain. So when planning for, the fiscal year, a sensible thing to do would have been to just take a very conservative oil price benchmark. Why using $75 per barrel? Why shouldn't we have used, $50, 45 or something, and plan with that? And I think we always fall into this trap of almost every year, we would set ambitions and targets. It's not just with the budget, it's even with GDP growth. If you check the budget figures, you would see forecasts for GDP growth always very high. We want a $1 trillion economy. We're very good at setting these ambitious targets that our actions don't always match our targets. And that's where annoyance always comes in. Because as it is now, okay, just look at average oil price, in the first 4 months of this year. It's $74 per barrel, average. And then when you look at current price, I think I sat maybe a few days ago, 3 days ago, oil price is around 68 or so dollars, $64 or $65 per barrel. So it tells you that Trump, I don't even think he started the oil price war yet. I think he's still dealing with the trade and tariff issues. So I still think it's going to come down, and it's going to be relatively a bit more lower, than that, when he starts with, issues with the Saudis and the likes. So it already means that, revenues are going to be affected significantly. And on the production side, we still have a target of 2 million barrels per day, and then there's already a very huge shortfall. So this is something that we often face every year, and it's just that some of these politicians don't really take into consideration proper planning, because it affects everything. And in fact, from history, what we know is that the part of the budget that will be affected the most is capital spending. In all of this, right? Recurrent expenditure will still keep going on. In fact, there was a year that recurrent expenditure even exceeded the budgeted figure. That's the actual exceeded the budgeted figure. But capital expenditure performance would be under around 50% or thereabout. So it just means that more borrowing, more deficit, a debt, profile of 144 trillion. Certainly that would escalate this year and increase even more. So that's just the message. It's sad that we're in this ship and we will never always learn. And I think it should come from the president himself. That's why I think the president needs to be very micro when dealing with Nigeria. Very micro. Look at the details and push what you want and what you think is right for the country. Don't delegate certain things that are very fundamental to your economy, especially knowing fully well that we still rely on oil. 88% of our earnings still come from this commodity.
Yeah.
There's not enough effort to diversify, and at the same time, even the commodity that is so important to us, we still can't manage it very well. And I think that's really, really sad.
Yeah, I'm going to come to trade because lots of people believe that Nigeria exports agricultural products. It's all a big lie, but I'll come to give the raw numbers. But again, back to this budget. I think the reason Wilson is this. They want to borrow. The revenues, as you know, we run a deficit budget. So the total revenues from crude oil go to pay salaries, pensions, allowances of only civil servants. Then we borrow to do everything else. And the budget deficits servicing, that's the debt servicing and salaries take up more than 100% of the revenues, more than 100%. So I believe that if they don't put those rosy numbers, they cannot borrow. Because even Nigerians will not allow you to do a budget that will say that you want to borrow 100%. You will make no revenues. You want to simply borrow 100%. So by making 75 the benchmark price and 2 million barrels the output projection, it shows a phantom revenue that you would never get. But you have to show that phantom revenues as the asset side to then borrow on the liability side, which is what the World Bank is calling out, that we're saying we want to make 2 million barrels of oil a day. When we're at 1.6, we want to sell at 75. When we're at 65. So, but that allows us to borrow. And the cost of that borrowing widens that deficit. That's just what's going on in my view. And it's April, the budget is done. It's done. And we haven't even started the deficit spending for the elections. You and I know that the next year's budget is just going to be spending. If you want money, they're going to approve it. It's all going to be spending. So it's a scary thought when you take it back to the macro picture. And
Carlo, and I think what we've seen in the last couple of years is that, in my view, I think the monetary policy side has carried the economy to some extent. And I don't think the fiscal aspect, I don't think they've done justice to some of the kinds of reforms that we need to see. We can't, the monetary side cannot carry all of this load for too long. There has to be that complementary effort to say, look, how are you planning for the future? How are you ensuring that your planning in itself are realistic in a way that you instill confidence on investors? Look, you're running into a debt cycle and you're going to finance a deficit of over 15 trillion naira. And your interest rates, 1 year treasury bill interest rate is at 24%. So how do you finance that? You go to the market, you're borrowing, at a very expensive rate. I was in a group and I was speaking to some, foreign investors. We're working together on a project, foreign and colleagues, and some of them are colleagues and friends. And we're talking about, green bonds and co. And when one of them asked what is interest rate in Nigeria, when it's around 24%, the guy was like, well, how do you run an economy like that with 24% interest rate?
Yeah.
To many, it feels like, what exactly are we doing with all of this, right? It's not in any way a sustainable way to run the economy. So that's why you see we just keep going into this cycle of you borrow and then you just refinance and then you just keep doing that over and over again. And then you have very little amount to spend on the real things that matter. So if you look at the actual budgets, I'm not talking about actual spending, not the budget right now, actuals at the end of the year, you will notice that debt servicing, which typically in the budget is always 25% of expenditure, actual debt servicing would reach like almost 50% or 40% or thereabout. Now remove recurrence and then you are left with just about less than 20% for capital. So I don't think that's why I was saying the structural issues that will lift the economy and lift many people out of poverty. I don't think we're paying enough attention to that. Perhaps maybe some people are, benefiting from the status quo.
Mm-hmm. And just to talk about the trade, like if you pull out the trade numbers from Nigerian Bureau of Statistics, they publish those quarterly trade numbers. You see cocoa, you see soybeans, you see all that stuff. It's not up to $1 billion. That's 1 billion. It's not up to $1 billion. So the economy is not diversified. Maybe let's put it this way: the revenue sources are not diversified. Crude oil and gas and associated give us about 88% of the trade numbers, maybe 81% of forex inflows. We have really nothing from cocoa. Cocoa made more money. I think it's competing with Bitcoin. It's more than crude oil. The rise in price of cocoa in the last 2 years. There's now a term called cocoa boys, that guys that want to go farm cocoa to take advantage of the rising cocoa price. Well, Nigeria used to be top 3 in the world for cocoa. Now, even in Africa, we're not top 2. It's Ivory Coast and Ghana. So we haven't even, God has given us cocoa. We haven't even maximized that. And what do you need for cocoa? Plantations, make the seeds younger, and then do the post-processing and capture more value here, because just farming the cocoa is the lowest on the value chain. The lowest contributor to wealth is farming the cocoa. The highest is in marketing the cocoa. So Switzerland gets more money from cocoa than the guys in Oyo State. But we haven't really done anything. There's a cocoa factory in Oyo State. I think it was the only one. That is the post-production. I think it's closed down now. And it closed down because they had loans that they couldn't pay off. So why would you allow something as strategic as that to close down? But just briefly on the trade, the diversification of the economy, what's your take on that as well?
Carlo, what I see, in fact, you are talking about cocoa. Cocoa is even too far. Take the non-oil exports in general. Total non-oil related exports. We're talking of soybeans, cocoa, and the likes. In total, everything is just $6.2 billion. When you look at that same spreadsheet, of Nigeria's foreign trade data, from NBS in Q4 2024. So if you look at the total for the year, it was just $6.2 billion, but we made 88 from oil. So 88 billion from oil. So you can see oil is still 88%, of total trade. And to me, that's not diversification. It's far from it. The funny thing is that in the 70s, it was the same. The oil was around 96%. And then so from 96 to 88 in almost 50 years. I don't think there's any progress in that regard as far as diversification of exports is concerned. And there's no way, and we've seen this over time, that look, we've tried this, it hasn't worked. There's no way you can grow this economy without growing non-oil exports. I don't want to say the reverse, because again, there are examples of oil-rich countries, that have grown with oil. But one thing is clear, and if you want to go from the academic standpoint, if you read the works of Jun Chang, and the likes, there is no economy that has moved and lifted millions of people out of poverty and moved from developing to developed without developing its industrial sector. And they put a caveat, except for a few financial havens and maybe a few oil oil-rich country, and of course, oil-rich also in quotes. You know what that means in terms of volumes, in terms of volumes output of oil that you produce. And so we've done this, we've tried it. Oil has been the mainstay for many years. It is still the mainstay, but it has not delivered that promise that we're looking for. So if we keep saying economy is diversified, I know people point to GDP and say oil is 6% of GDP. It means that the economy is diversified, but that to me is a fallacy. We need to look beyond that, because again, what happens to oil? The link between oil and foreign exchange is very strong, and you know what foreign exchange does to the entire economy itself. I think I need to explain this with the last experiences we've seen. So oil is still very, very important to Nigeria. And the sad thing is, even if, okay, let's say we don't even want to diversify, how much are we even getting from that oil? It's still very low. So the problems that to me are just twofold. First, non-oil is not growing as fast as it should. Secondly, even the oil that we say is our mainstay, we're not getting much from it. Imagine 1.4 million barrels per day, and then the target is 2 million barrels per day. Huge gap that creates a problem. And if we continue like this, I just think we'll just keep making maybe a little progress in some areas, but over the long term, I don't think we will grow and lift that millions of people out of poverty that we seek to have.
Yeah, nothing transformational. So we've got a few guys that want to speak. Let me just ask you my last question before I turn the mic over to the folks that have questions. So let's just talk about interest rates. So interest rates for Nigeria. Right now, this is the risk-free rate. If I take my money and I put it in the bank and I buy federal government securities, risk-free, I get nearly 20% for 3 years. So if I give the government ₦1 million, they would give me back 200,000 naira. Guaranteed risk-free. So if I give them 10 million, I get maybe 2 million and all that. So with that sort of picture, why should I invest in Nigeria? Why should I build an SME? Why should I start a farm when all I can do is just give the government 20 million and just survive on 2 million a year? I have my house, I have my car, The point I'm making is this high interest rate, I don't think people really understand that it's inimical to the growth of the SMEs that are the key drivers to jobs and output in Nigeria, because it's so easy to make money risk-free in Nigeria. Then tie this now into the dollar exchange rate. The dollar exchange rate right now is about 1,600 to a naira. I, in a way, support the whole idea of removing the subsidy on dollar, because we can't afford it as a policy, as a baseline policy, saying we want the economy to price imports appropriately so that we can then have import substitution. But when the economy locally cannot produce because there's no power, as simple as that, does it still make sense to maintain the regulated exchange rates? So if you could tie this to the interest rate and the exchange rate, if you could tie that and marry that for us and give us that answer, then of course we'll then let the other folks speak. Thank you.
Yeah, Carlo, I hold a kind of like different view on interest rates and the link between interest rates and exchange rates. And this is coming from the premise that, when the central bank came on, they argued that, they mentioned that they want to follow this strict inflation targeting and switch to, trying to tackle inflation with interest, or trying to tackle inflation by raising interest rates. And it's part of what has led us to where we are now. That look, and in fact, at some point we saw that before the last two MPC meetings, one held this month, just last week or so, and the other held, 2 months before that. What you find is that in all those 14 meetings before the last two, interest rates kept going up. The MPR, they kept increasing the MPR over time. But what happened to inflation? It didn't really reflect that increase. I mean, inflation kept trending upwards. So out of that period, and it even started not even with the current CBN regime. It started since May 2022. That's when the MPC started raising rates. And in fact, before the central bank came, if you notice, when they raised interest rates in the last, regime, what happened was inflation did not flinch. Inflation kept going up. Even the dollar still had issues with the gap between parallel and official markets, and then there was no appreciation, of the exchange rate. So when this governor came in, he made very interesting reforms. It's part of why I said the monetary policy side has been carrying the economy for quite a while. He cleared all, the FX backlogs, implemented, brought a lot of transparency, willing buyer, willing seller approach, and all of that. He also raised the interest rate, or continue with raising interest rate. But for me, I think the most important reforms that led to some inflow of foreign investment into, the financial market, particularly I'm speaking here on portfolio investment. I think those key reforms were the exchange rate reforms rather than raising interest rates. I think Nigeria's interest rates were quite high enough to attract investors in the past. Because if it was interest rates, money would have come in before this central bank governor came in, because interest rate started going up before he came in. But those monies did not come in. It was until he introduced those FX reforms that money started coming in. So in my view, I don't think it's necessarily the interest rate itself. I think it's the FX reforms to stabilize the system, because people were asking questions. Why would I bring in money into your economy when it's time to take them out? I can't. Even if you offered them 50% interest rate, those monies would not have come in because of those FX issues that businesses were facing and investors were facing. So that's my view on that, the link between interest rate and exchange rate. I don't think it's the high interest rate alone that has brought in investors into the country that we're seeing, particularly portfolio investors. It's major on the FX reforms, and that's one. The second thing is the link to small businesses, like you mentioned. It's not just about people investing in fixed income instruments alone. It's also on the flip side in terms of the borrowing, cost of borrowing, that instead of you to carry your money sorry, I'm trying to fix this. So it's in the cost of borrowing that, interest rates are around 30% for maximum lenders. So you go to a bank, you want to start a business, already you are being charged 30%, on to get a loan. That's, how much profit do you even want to make for you to pay 30% interest on your loan? So I don't think that, in a way, I don't think it's just about people incentivizing people to invest in fixed income instruments. It's also on the flip side, and there's no way we can, attract the kind of investment into key sectors. We cannot reform the SME space. Whether it's manufacturing, whether those in agriculture, agro processing, because to scale, actually, you need finance, you need capital, you need to get loans and all that to scale. That's why we see that majority of businesses across the country are very micro and small scale. And in fact, when I was doing a study, I found out that 76% or thereabout of manufacturing firms in Nigeria are owned by sole proprietorship. It's like one-man business. Somebody just opened a small shop making shoes and hire one small boy to support him. That's not the kind of manufacturing when we're talking about industrialization. That's not what we should mean. And part of the problem why that man can't scale, most of it, in fact, access to finance. And we've worked together on this Faith Foundation State of Entrepreneurship report over the years. Access to finance is one of the major bottlenecks that these businesses face for them to scale and become micro, small, medium, and eventually large. So it's really a problem. And it's even more complicated because the role of the development finance institutions, in my view, I think is still very, very limited, very weak coverage is a problem. I was speaking to a business owner, a manufacturer recently, and when she told me the hurdles she went through just to get access from one of the development banks, in fact, she had to pay for lawyer fee, so many fees and bottlenecks within that process that it just makes you tired. And if you are not educated, I'm sorry, it's just a difficult way for you to raise funds. And so many people rely on personal savings, borrowing from family and friends to be able to grow their business. And in the long run, it's not sustainable. We need to talk about systemic ways of addressing some of these problems.
Excellent. All right, thanks, Mr. Blood. Let's get Olumide in. Olumide, and then we'll just run down the folks that are here to speak. Olumide, I hope you're still here. Wilson is here talking to us about the macroeconomic picture in Nigeria so far. Go ahead with your question.
So, Wilson has said almost everything. I just wanted to add a few flavors and just keep the conversation going. I totally align with Wilson's arguments, disposition, but I would like to just briefly put it in the context of good, bad, and ugly. So, in the good part, on the macro side, I think we've bottomed. If you're coming from President Buhari, definitely we've bottomed. It looks like an upward trajectory. If you look at Dangote refinery, petrochemical plant, about $21 billion investment. Dangote Group is expecting $25 to $30 billion this year. That's positive. If you look at the fact that the FX reforms have attracted investment, just like Wilson said, that's positive. If you look at the liberalization of FX exchange market affecting the capital market positively, that's positive, But you look at the bad side, GDP has shrunk. It means that the richest men in Nigeria are now controlling the economy. About 20 years ago, Dangote's wealth was just 5% of Nigeria's GDP. Now it's about 12%. Now, if you add to Lulu, Rabiu, Otedola, Jimovia, and 6 other people, you've already taken about you've already taken about a fifth of the Nigerian economy. So it tells you that the average Nigerian is poorer because of the FX readjustment. The Naira has become weaker. We don't produce, so earning power is so low. You also look at the fact that our life expectancy rate is even struggling so bad that Niger has the better life expectancy rate than Nigeria. So it pretty says that when you finish out of school, data is telling you that you have only about 3 decades to live and work. So our productivity on that side is GDP per capita horrible. All those. Then the fact that we are even talking about 3% when countries that have much bigger GDP are giving out 7 to 11% tells you that $1 trillion economy looks like a joke in reality. Then you look at the fact that our budget again, we say we spend on infrastructure, and recent data shows that the infrastructure we spend on is a waste. Look at the refinery, for example. We borrow to spend on the refinery, and the refinery is not working. It tells you that it's a living cost on the Nigerian economy. Then you look at states, how they've performed with education and agriculture. It's horrible. In fact, I've not seen this bad since I've been reporting in the financial space about agriculture. I've not seen this bad ever since, because just the fact that insecurity has really eroded production, particularly in food baskets like Benue. You tend to surprise to also see Enugu Ekiti bringing high inflationary numbers despite debating. So it tells you that the integration of Nigeria's economic line are not there. Then there's also a report this month by The Economist, one of the oldest financial magazines in the world, that there's no country in the world that has citizens without electricity like Nigeria. About 97 million Nigerians are without electricity. And there was a time, I think before 1972, when Lagos commanded almost 24 hours power supply. So it means that we'll do it. Then if you look at the ugly side is that you see the country as the integration culturally has weakened. The incentive to be productive has weakened. Look at what attracts today's youth: skit making, TikTok, BI on the internet consumption side. You see the fact that Donald Trump has awakened the Europeans. You see spending in Germany. You see fiscal reforms in France, Spain. You also see the Asians spreading their tentacles around the service, trying to create an integrated economy to reduce the U.S. tariffs impact. But, on Africa end, it looks like it's so kind of, why I'm just painting this macro, the good, bad, and all this, it just pretty boils down to one thing. I think, to be honest with you, the average Nigerian doesn't feel better because, as I said, they've gone poorer. Many of these guys cannot even have decent meals, And if you look at data from the north, for example, children from 0 to 5, more than half of them have stunted growth. So if you had 10 years to those kids, for example, it tells you that their productivity, performance, because you need metabolism to be able to think, you need metabolism to be able to carry activities. You need good health for you to be able to have. So it seems that we are building landmines, and our politicians all over the world, they still drive cars, they still wear cartier, they still drive private jets, they still use Maybach. So there's a disconnect. There's a big disconnect. And I expect the president to have realized this by now, that despite the reforms that he has made, there's a disconnect between the macro and the micro, and it makes it very difficult for financial reporting. It makes it very difficult for the populace to understand the benefits of those reforms, and it also creates more gap for the Nigerian ecosystem.
Yeah, I mean, it's just, you've detailed out just what the average Nigerian feels. You will be hard pressed to find a Nigerian who will tell you that economically, that he thinks he's doing better today than 2025. So like I said at the beginning, 2024 was the year that Nigeria had the highest GDP per capita in Nigeria's history. 2024, that's a high watermark. So right now we're way off that. In the 80s, we had high watermarks in terms of, we had the oil boom and all that. But also in the 80s, we had the austerity budget where we lined up to buy sugar and essential commodities. So what will the next 10 years bring? That's just the picture. Right now, things are happening.
You meant 2014, not 2024.
Sorry, 2014. I keep making that error. 2014, that's the high watermark for Nigeria from 1960 to date. The high watermark has been 2014, highest GDP per capita. So if you go back 2014, that's where you want to be, at least in Nigeria. If we get back there, we've just recovered. We haven't grown. So we just watch the English Premiership end now. If Manchester United next season gets back into the Champions League, are we going to say Man U has grown because they are back in the Champions League? This is a team that won the Champions League 3 times. So if next year Man U now goes and they are 5th and they are back in the Champions League, will somebody celebrate and say, wow, Manchester United has grown its GDP? That's what we call base effect. You are down, so when you go up, it's 100 or 200% return. What we want to see is a Manchester City that has consistently been at 1, 2, 3, has won the league. This is their bad year. They came 3rd. Their bad year. So in terms of Nigeria's bad year, we should not be going back to the 80s, which is what Dr. Additional was saying when he was talking about the GDP per capita. We should at least maintain above 3%. Then we are touching in base with population. IDKD, did I get that right? ID in the module.
You try.
Sorry about that. Yeah, please go ahead, sir.
It's ID Hide. Okay, good evening, everyone. Good evening, the host and Olumide. My question is, I've been trying to diversify my portfolio into farm and stocks. So I just want to get, my question is it the best time to enter the market as a small business person with small capital? That's my question.
That's for Olumide. Olumide is asking for timing. He's saying, can he time the market and enter now? Is it at a discount? or should he wait for a signal? What signal is he waiting for, Lemide? Well, how would you answer him?
Yeah, so first of all, I'm not a market prophet. I try not to do that. The market holds composers. I think they're very good at forecasting, and you just need to understand that the market has defied norms. Normally, historically, May used to be a time the market digress. Falls. Usually because at that time banks are paid dividends, so there's profit taking. A lot of players are adjusting, but what we found out is that because of FPI inflows in the market, we've seen blue chip stocks rising. Just look at Nestle. Nestle some months back was below the 1,000 mark. Now it's oscillating near 1,500 mark. You look at the banks are trading strongly. Even when the false news about Fidelity came out, it looked like Fidelity was going to drop around 15 support, but it sprang above 70. So basically, what the macros is saying is that investors still see Nigerian stocks very attractive, and they are right, because when you compare it with different markets, it looks very cheap. But personally, it depends on your horizon and your risk appetite. For me, I'm not buying in because I definitely got in at discounted value. But there are still some stocks, that you can look, which I don't want to mention. You can speak to your investment bankers, or you look at stocks that have suffered this year, particularly in the manufacturing side. Look at Dangote Sugar for yourself. Fundamentally, the company has solid prospects, but recently the balance payment, we don't know whether it's impacting and things like that. So yeah, you can look at all those things, but like I said, the market is really having a run of its life.
Yeah, and just to say this, right? If you are farming, everybody is a farmer in Nigeria. In my village, they are farmers. But if you can look at the value chain, there's a bit more margins for you if you did the post farming. So if you went to your same village and you said, what are they farming here? Maybe it's cassava. Okay, I'm going to do processing of the cassava, or the storage, or the packaging. You actually are in the same agriculture, but you are adding more value than just taking whole cutlass or irrigation. Even if you do solar irrigation project to supply, that's all farming. So the pandemic that also tried to broaden that definition of farming that you want to do. Just the transportation or the storage or the post-processing gives you higher margin than just putting the seeds in the ground to have it come up. For stocks, like Olumide said, it's your risk profile and your horizon. If you want to invest and you want to get your money less than 2 years, don't do the stock market. If you have a longer horizon, you want to consider that, but of course, talk to your advisor. Thanks so much for that. Let's get Achiever. Achiever.sui. That's a B. So Bola AB. Did I get that right? Achiever?
Yeah, it's actually a Yoruba name, Abisag Bola.
I apologize. Yeah.
Yeah, no problem at all. No problem with that. Coming from I've listened to this is the first time I'm getting those spaces like this, and I've really learned a lot, right? Coming from because I come from like the blockchain perspective, right? I would love to hear your perspective on blockchain. Like, what are your thoughts on blockchain? Because obviously, I'm very, very sure one or two people here will have must have heard or actually like interacted one way or the other, right? I just don't know, like, how does that sound to you guys, like in terms of investment and everything?
Well, so let me try to ask this question in a different light. The SEC has just more or less green-lighted Bitcoin as a security. There seems to be a bit more regulatory acceptance of the Bitcoin. We know a lot of younger people do this crypto Bitcoin thing. Is that going to be a positive, in your view, in the growth of GDP, capital, employment? Does that have any positive, you think? Just that whole regulatory side. What's your take on that, sir?
Well, to be honest, I don't see any very strong and clear linkage with whether GDP or jobs or employment. I think these are perhaps investment channels where, as you know, it can be very volatile. Sometimes it's risky. If you come from a traditional finance background, you will be even more skeptical. And you say there are no fundamentals driving this market, unlike what we see in the stock market and other, financial market, bonds, treasury bills, and the likes. So in terms of the impact on growth investment, I don't think there will be that much very strong linkage. And again, how much of exposure are we, to some of these financial and to some of these investments? I don't know. I think maybe Olumide or Anko would be quite better placed to speak on this. But for me, I think I've moved my portfolio, and I'm at a point in my life where I'm very, very risk averse. And I think I've taken all the risk I want to as far as investment is concerned in my maybe early 20s or late 20s and early 30s. But now I'm very, very conservative when it comes to financing. So, in fact, even the stock market, I follow limited sometimes, and the high blood pressure it gives, I'm not really ready for all of that. So, my portfolio is very and heavily skewed towards fixed income, where I'm guaranteed of my returns, and I don't think I can take that pressure anymore. So, Olumide, I don't know what you would think on that.
So I totally align with what you said. In fact, it was totally spot on because what sector did was the foundational layer of showing the fact that these assets are legal. In fact, you look at the argument before was that these assets were never illegal, but there was no paperwork and banks were not allowed to transact. So what it makes now is that for you to deal with banks, you must have SEC regulation. But the question mark around it, Carlo, you have to understand that the intricacy between Nigeria and the world's largest crypto exchange, Binance, it cast a black spell on the industry. And if Binance is not in the space, what are you really trading? That's the argument. Binance has more users than the population of Nigeria. Binance has so much volume. And if you look at the Americans are less interested in our markets. I'm talking of Coinbase, Gemini, because of this, I've forgotten the money laundering act, where it's very difficult for Nigerians to even transfer funds to new apps like Revolut and things like that. So I think the key is that it's positive, but we also need to look at the fact that the federal government is partnering with systemic players in the space in terms of tax evasion, in terms of money laundering and different things. So until those goals is clear, or until the crypto industry perceive a friendly, then maybe we'll see. Because the tax reforms is now, I think the tax has been waiting for the present asset, and naturally, the federal government is expected to generate revenue from digital assets. But the reality is that many of these digital assets are not playing. So digital exchanges are not playing ball. So we'll see how it goes. I think that's all for now.
Let me ask you a question again, just go off his initial question. The US has passed the Genius Act. I saw the EU, I think it was Lagarde saying, the lady saying that the US has now got an advantage as this Genius Act is going to perpetuate the United States dollar as a de facto exchange reserve currency. So they also want to do theirs. So I know Nigeria is working on a stable coin. Again, this stable coin, E-Naira, Nigeria, ECOWAS, is there a time in there that Nigeria can use this currency? We have the Nigerian banks in West Africa. Is there something we can do now to outflank the ECO, which is a French move to use the French currency as a de facto currency in West Africa? Is there something we can do now?
Yeah, to be honest with you, I think the Americans are far ahead. There's even a report that American banks are working together on the stable coin to really hamper on these stable coin companies. If that comes to play, I think that will be the nemesis of many of these stable coin companies. I think the Americans are far ahead. And I'm in Europe, and I probably met some of these policy makers. Lagarde is anti-Bitcoin. The Germans are anti-Bitcoin. The French are anti-Bitcoin. So there was a time, the last European Central Bank meeting they had, they said Bitcoin is an agent of money laundering tool. They don't even want to have anything with stable coin. Is still a mixed reaction. If you look at stable coin usage, Euro stable coin usage, it's less than 7% of the total stable coin. Most stable coins are based in the US dollar, and that's probably the advantage the United States have. For Africa, I think one of the problems we have in Nigeria is inconsistency. If you look at from the E-Naira to our stable coin to NGN I don't see it flying a bit because, first of all, we don't have the liquidity. Our infrastructure is not as ripe for this integration. The best Nigeria can do is integrate with the bigger players like all these Seco, Twitter, and maybe tend to be more like agents. But saying we want to create our own window, let's be honest, our currency is a bit volatile. Our currency is not attractive. The NGN and the NGN stablecoin, you could see the launch. It hasn't really hit that traction. So I think Africa is out of it. Europeans, I don't see them causing a dent. I think my only fear is just how the crypto markets will be after President Trump, because right now it seems President Trump is giving it all his support. We see investment tripling. We see players getting bolder. We see a self-friendly. So that would definitely create an advantage for the Americans. But to be honest with you, I don't see how Nigerians will gain from that financial or cultural and political advantage the Americans have.
Gotcha. Okay, let's get Afribull in here. Achiba, thanks so much. I think you must have gotten the answers you have gotten one way or the other from the answers that you got, yeah?
Yeah.
Perfect. Thank you. Afribull.
Yeah. So let me just.
Go ahead.
Okay. The thing here is, right, I think coming from Wilson, I think the issue we actually have is just centralization, right? I think that's what actually differentiates the blockchain world from the traditional financial world, right? That's the piece, or the should I say the stable, or should I say the stability of centralization, right? And that is one thing even the blockchain technology on its own is literally against, right? For the traditional finance, okay, it's centralized, the government is backed by the government and all that. When it comes to the blockchain, right, it's not centralized, right? And I think that is one of the reasons why any huge guy will not really actually want to like go into actually invest in blockchain, right? And taking from this perspective of
I don't really go too much into the blockchain, so I think I just want to make sure so we can just really talk about the economy. At 10,000, if you don't mind, yeah. But I just want to make sure you got your answers that you wanted. Gotcha. Let's get Afribull. Hop in here.
Hi, can you hear me?
I can hear you very well. Thank you so much.
Hi, yeah. Thanks to Chance Speaker. I really enjoyed what was said. But I wanted to add, before I get back to the economy, I wanted to add just to what Olivia was talking about regarding the stablecoin push, especially with Africa. The US banks, as you said, the US banks themselves are leaning into stablecoin creation actively, a joint approach. But it's not even on a geopolitical level, but they're actually themselves trying to compete with with Visa and MasterCard. Because Visa and MasterCard, they have their own stable coins currently. I believe they have their own stable coins currently, and they're looking at a global rollout of that stable coin, which effectively kills any sort of, or could kill any sort of national competition, or looking on Nigerian level, any sort of competition to create something similar, because the ubiquity is already there, the platform is already there, and the infrastructure is already there. So that is a big concern, because the US banks themselves, that's what they're worried about more than a coin from another, a stable coin from another country, but probably more than USDC. But USDC is more stable; they are more established. But I just wanted to add that Visa and MasterCard themselves, they are seen as the biggest threat, the biggest potential players in the stablecoin market.
I think honestly that if the US banks launch their stable coin, right, and Facebook wants to get back into that whole thing, that global payment system. If Facebook ties in with those US banks, now you have on your Instagram, on your Facebook, on your whatever app, you can send money from Nigeria to Brazil. No bank, no fees, because you just send that stable coin. Yeah. No, but
US include Facebook. Facebook created all the stable coin and stuff like Libra. Facebook created it first. But what you just said, it means that you skip the dollar, can you?
No, but Trump was against it. But it was against it because they were going to set up in Switzerland and use other currencies. But now, if the US banks create a stable coin using only dollar, Now, if Mark Zuckerberg gets behind it and says we're going to use this dollar, that's now an attack on BRICS, because the whole idea of BRICS is that China you can settle Ethiopia and Egypt can settle without dollar. Now the US will tell you and I that we can buy. So you go to America, you get that stable coin. You come to your Facebook, you can send that money from America to Nigeria in a second. No fees, nothing. You can pay, like now, you can put that stable coin on your Naira MasterCard and travel and just pay. It's dollar. It's like carrying physical dollar. So why wouldn't America support it? It boosts the dollar use. It knocks away BRICS. It boosts profit for American institutions. And I think the big threat is going to be like this, because I just think that's where they're going to go with this. I think that's where they're going to go with this. Yeah. Afi, I'm not sure. What's your take on that?
I know. I still think that, because I was speaking on the economic implications, because whoever, it's likely going to be a U.S. entity or U.S. group that dominates the stable coin infrastructure in the future, whether it be the U.S. banks or Visa, MasterCard. I particularly am in favor of Visa, MasterCard winning out because they have this ubiquitous infrastructure across the globe. And the implication here is that any national or local alternatives will never be able to compete. Unless there's some sort of embargo or regulation. Most national alternatives and a lot of central banks looking at stable coins will not be able to compete with Visa, MasterCard joint approach or individual, and even less so with the US, a joint stable coin from US banks. So I'm just looking at it from the economic implications of nations have to just let that go.
Yeah,
and adopt the system.
Paper is dead. Again, I go back to the fact that if they can, Meta is the key. Instagram, Facebook are used more outside America than in America. Most Americans don't know what's called Facebook. They don't use WhatsApp. If I ask an American WhatsApp, they think WhatsApp is a scam. That's how they know quote unquote scams, WhatsApp. So if you're able to send money on WhatsApp, which is $1 across the board, then the business of Nigerian banks, Western Union, all this P2P, all this stuff that we do, because now we have to go from Naira to stablecoin and transfer money. You have an alternative that it's legal because the US government supports it. It's a legal way. So if Nigeria says it's illegal, it's like Nigeria saying dollar is illegal. This is a legal currency issued by a JP Morgan, Wells Fargo, that you can buy in a US bank, load on your WhatsApp, and send to your friend in Lagos. Of course, WhatsApp will keep the data, so it's not going to be like money laundering, but it makes it seamless. Go for it.
Yeah, it will be tough because look at JP Morgan, they have their coin, and what they try to do is use it for internal JP coin. You look at PayPal, they also have their coin, stable coin. I totally align with what you're saying, but my context is that banks are not just they are not just tech firms where you could use AI to watch them off. I think they have this more like a cabal setting. You look at the bank inter-settlement rate. If you look at what they did to XRP, because there was a time XRP was trying to integrate with many of these banks to replace SWIFT in terms of transaction, because it's much faster to run remittance on the XRP ledger than SWIFT. But you look at the politics behind it. So yeah, I think this thing will take a long time. But I think for me, what the Americans will benefit under Trump presidency is the acceptance of crypto in the banking industry. We've seen JP Morgan saying they're going to accept Bitcoin. Customers, they're going to offer Bitcoin ETF. That's a big one for Bitcoin. But saying that stablecoin will be the major, I don't think so.
Okay. Let's see what happens as we go along. Let's get Ben. Go ahead.
Could I just touch on just on the main topic?
Go for it.
Yeah. So just broadly, I think in macroeconomics on the greed side, I think I can praise mostly the monetary policy on the central bank. To be fair, Kadusa has done. I think he's done very good job stabilizing FX, settling those swaps and bond contracts, and that at least has prevented the worst case scenario. From my perspective, at least the worst case scenario hasn't happened, and maybe probably we bottom out and it's only up from here. Probably, we would say. But on the fiscal side and government policy, it doesn't seem like they are serious in addressing the pain points that Nigeria actually faces. It doesn't seem that way from my perspective, because I don't understand how you have. So we have a growing deficit, and from last year's budget and this year's budget as well. Increase in debt payments. There hasn't been any sense of austerity, targeted spending, or just a general structured approach to fixing the most immediate, inflation and rejigging the real economy, building up the middle class. I haven't seen targeted policy force that it seems like more of the same. And then that doesn't even mention the corruption and that look at padded budgets, leakages. That we can get into that, but I'm not seeing a targeted approach on the fiscal side.
And that's I think that's the biggest issue, really, that the body language of the government today doesn't have this urgency or sense of impending, should we say, fiscal issues. They are not worried. That's the way their body language feels. There's no worry. Exactly. If you read what they're we're going to spend money, we're going to travel, we're going to do this. There is no fiscal. The economist just highlighted what's going on. There's a fiscal cliff coming, also a monetary cliff coming, which means we're going to get to a point where we don't have enough money to just keep the lights on, and we can't borrow. Because we can borrow in Naira, but we can't borrow in dollars. So when we get to that cliff, what happens? All this FX reserve that we're accumulating, what's going to happen to them? If next summer comes and we suddenly don't have dollars to pay for school fees abroad, there's going to be a middle-class riot. And the middle-class riot is worse than the poor man's riot. Because people listen to the middle class. When I mean people, the government listens to the middle-class riot. And then it's going to be, okay, let's give you guys a subsidy to pay your school fees abroad. That's what's going to happen, depleting the foreign reserves even more and setting us up for a very, very bleak few years coming. There's no urgency. I know they listen sometimes, but they don't act like this space is happening. We can see it, and I know they can see it, but they're not acting like there's something happening. If you talk about this on Twitter, you get the defenders coming and say, oh, everything is all good, this is politics, go back to Anambra. There's not that sense of there's a problem in the country. And there is a problem in their country when you say your budget is going to be based on $75 and you're going to sell 2 million barrels, but now it's 65 and falling, and you're at 1.5 million barrels. It's basic math. But,
I was gonna, but just a quick question for Wilson, and this is just on the inflation front. You have potentially, allegedly, a trillion saved in subsidies, allegedly, and it's assumed subsidies was truly stopped. Let's just make that assumption. No transparency, as far as I'm aware, of how that money was spent. The only signs, indication were the alleged 500 billion was given in cash to some of those buffers for the economy. That's just cash to homes in Nigeria or to people in Nigeria. And I'm just trying to understand this. When you're talking about tackling inflation, is handing out cash to the general public, even if for that goal of easing the current, isn't that counterproductive to the goal of tackling inflation? And when you also look, and part of that question is when looking at the other levers they could have pulled or can pull currently to keep inflation down, reduction in customs and duties, even pulling back on some government spending. Why I'm not seeing that? I think I'm not seeing that effort on the fiscal side, enough effort on the fiscal side to really tackle the inflation. So I wanted to get your perspective on that.
That helicopter money.
Exactly. So, and that's just a question to Wilson.
Yeah, I can hear you. No, I think you're right when you say that there's not been that much effort to rein in on inflation. And in fact, so my response will be based on the fact that I don't think inflation is driven by Nigeria's inflation in particular is driven by too much money. And if they are monetarist here, I apologize in advance because I think it's more of a structural problem. And so to really tackle inflation, I don't. That's why I think the link between the monetary policy, you know, rate and inflation is I don't think is that strong in Nigeria, and so it's part of also why I've always tried to say, look, with inflation targeting, is that really the best approach that the central bank should use to tackle inflation? Shouldn't we be looking at more on addressing those insecurity in food producing regions? And the central bank, monetary policy committee has alluded to that in their communiques over the years that look, all of those structural issues are very important to address, whether it's insecurity, whether it's even productivity within the agricultural sector. I saw a video of somebody how they dry rice in one of the states where they put it on the road. Like, you just keep wondering, is this really, how much can we get from all of the resources that we have so far? So there are a lot of gaps that I've seen, whether it's in terms of production, productivity in the agricultural sector, in the industrial sector, and in fact all of the sectors producing food or food-related items. And then so that's why I think the reform should go into, rather than trying to use interest rates to tackle inflation. And on your question on cash to citizens, I don't think it's counterproductive. I think Nigeria is at a point where many people are too poor that we need urgent intervention to at least support them in the way that people are going to bed hungry. And just look at the stats that I read, and this is from the General Household Survey that the NBS released some months ago, right? So the household, they basically went to households, asked them questions, how do you live, and all of that. Let me just read it out. 66% of households could not afford healthy, nutritious, or preferred food in the last 30 days, preceding the survey. That's 2/3 of your household.
This all over Nigeria.
Yes, all over Nigeria. This is a general household survey. They do it almost like every 5 years. The last one was done in 2019. This one was released in 2024. I can share the report with you. You can go through it. So when you see that kind of stats, it makes you worried that people are going to bed hungry. There's one that I shared earlier that almost the same percentage as skipping a meal because of lack of money. It says the share of household expressing fear of not having enough food to eat because of lack of money increased from 37% in 2019 to 62% in 2024. So people who are afraid that they will not have enough food to eat. Then you talk about poverty. The World Bank says, since 2018, 2019, 40 million people have fallen into poverty, in Nigeria. You talk about education. People are not going to school because of school fees, because of access, because of, basic issues, that money and all of that. Even those in school are not learning. So for me, that little money, even we say 20,000 is too small, 10,000 is too small, you would be surprised how much that would do for people in some parts of the country, and if you follow Miriam Uwe's and some of the work she's done with this cash social register and all of that, you would see that as little as 5,000 naira was then under Buhari regime, it was a lifesaver for many people. That's to tell you how bad the situation is. And mind you, this was before subsidy was removed. This was before the FX reform. So you can imagine the state at which people are now. And so for me, look, I think Nigerians deserve more than what they're getting. The coverage of the social transfers is very limited. I think I saw about 15 million households, only are in the social register. And there's been some process of the state governments are saying they need to review the register to know who is really there and all of that. That process has stalled some of these, transfers. So I think people are going through real hardship, that we need some cash transfers, we need some support. And for me, I don't think that is what will drive inflation, especially if we are able to, at the same time, tackle those structural problems that infrastructure insecurity and all of those that have led to higher prices over time. And the last thing I would say on this is it saddens me when I hear people say that we've reduced inflation from 33% to 23.7% because of the recent adjustments in how inflation is calculated, the methodology, adding more goods to the basket and all that. I don't think that's how we should treat economic data. And I said this before they released the new figures, that look, I know some people will start coming out and say inflation was 33%, now it's gone to 23%. But I still think the drivers are still there. If you read the last MPC communique, in fact, that was one of the things they complained about, and they said, look, the way it's going, things might get even worse if the government doesn't tackle some of those issues and drivers of inflation. So it's a tough one. It's really sad, and I think both fiscal, monetary, trade, industry reforms are needed, to tackle the problems. It's not just monetary. We can't rely solely on the monetary side.
All right, and again, so inflation is driven by food. Just to put that point there, and again, Mr. Wilson, I just feel that if in Nigeria you give poor people 25,000 naira a month, you will see the effect. It will be positive. These people that are giving this money to, I have traveled to all states in Nigeria, some twice. There are some states in Nigeria, some places in Nigeria you go to, they don't even use currency. They use corn to trade. If they want to build a house, they will call people on a Saturday, and they will build that house on a Saturday with mud, and they pay them with corn. They don't even use currency, or they pay them with a goat, or they pay. So if you give someone in that community I was in 25,000 every month for a year, that place will become changed. People cannot eat, people cannot afford. If you go to those places, there are no trees. There is nothing green for a mile because they cut those things down to cook. There's no gas, there's no firewood. They buy charcoal. Charcoal is their most expensive purchase. I lived there for a long time. I did, so I know that. So those people, 25,000 naira is a lot of money in that place. And the other places in Nigeria, just think about not the Lagos, not the Abeokuta, not the Abia. No, those. If you go to my village, and you give people in my village, where in Abia, 25,000 naira every month, it will change. So I just feel that this money is not going to the right people. Maybe they're giving it to people in Abuja City or Lagos City, and then saying they're giving it to poor people. That's what I feel personally, because what's the income in Nigeria that you say you give someone 25,000 in a place that has no power, no water, no presence of a government, has nothing, there's no economic activity? Then you drop 25,000 in their pocket where they can go buy, even if it's the charcoal or the gas. You would see a change. But I don't think it's happening, sir. That's my view. I don't think it's happening. Happy to prove it wrong. Let's get Sahid. Sahid, you've got the floor. Ben, Ben, I apologize. Ben, go ahead and we'll take Sahid after Ben. Ben, please go ahead. Sorry, I'd called Ben earlier.
Yeah. Good evening, everybody. Thank you, Carl. Good evening to Olumide, our speaker, Wilson. Good evening. It's been a very informative one. I have a couple of questions, but let me just pick on these last points. You guys were talking about the conditional cash transfer. Anytime I see Wale Edun's face on the news,
when they put it out on the news that they did the conditional, I usually get angry because yes, we've spoken about how the story of inflation in Nigeria is not exactly a supply of money issue, but more of a supply of goods and services, more of a supply of goods and services issue. I'm not angry with the conditional cash transfer because I feel like it's going to cause inflation. It might have an effect, but it will be very, very little, to be minute. But I just believe that money is not even getting to the people that they are telling us that it's getting to. That's what makes me angry about, the conditional cash transfer thing, because it's one of the points that this administration touts as this is what we are doing to curb the effect. So that's just what I'm going to say on that. Then another thing I wanted to just speak on was the subsidy removal funds. The government had told us that I think about 3 or 4 trillion that was going to be saved from subsidy would be used to build a housing program. That is perfect. I think I love that idea. But so far we've not seen, there's no transparency, we've not seen anything on, anything tangible from what's going on there. But on because I was in support of subsidy removal, unification of exchange rates. The only thing is that these funds have to be channeled in the right places, and there has to be minimal corruption. Generally, I believe that the next 5 to 10 years of Nigeria's economic story is very, very crucial, because if you look at history, during Obasanjo's time, they made a lot of reforms. We are rising at some point. We're top in Africa, one of the fastest growing economies. But there's a continuity issue in our governance process. After Obasanjo left, a new set of people came, and they didn't even follow the plan that Okonjo Iweala, Sanusi, all those guys, respected economic guys, all the plans that they had laid, it's like these guys with the new guys that came after them were not following them. So I think we really need to have a long-term goal as a nation, and then focus on this goal with continuity from this government to this government. If this government is coming and do some things, another government will come and go in a different direction. It's like, where's the nation going? You understand what I'm saying? Where's the nation going? So let me just head into my question so that I won't take so much of the time. If you look at the budget, we're spending about 1.2 trillion more on recurrent expenditure compared to capital expenditure. I don't think that that's supposed to be right. This is my question for Wilson. Are we supposed to spend the difference between, are we supposed to spend 1.2 trillion more on recurrent expenditure than capital expenditure at this point in Nigeria's economic trajectory? Is this what we're supposed to be doing?
Sorry, when you say 1.2 trillion more, what do you mean? Because I know it's always like a 30, 70% recurrent, of course.
Recurrent expenditure is about 9.92 trillion right now. Capital expenditure is 8.7. That's about the over a trillion difference.
Are you sure you're looking at the same budget? Because we're talking of a 54 trillion budget, and capital expenditure is just 30% of that.
I think there's a discrepancy. I think what I'm looking at is different from your own. Let me hear the numbers.
Yeah, maybe you're looking at the quarterly, maybe you're looking at some quarterly spending or something. But what from the past data, what you usually find is that recurrent expenditure, there are years where it will go to 70% of total budget. There are years where it goes to 75%, and then capital expenditure always comes to around 25 to 30% of total budget spending. But that's in the budget figure. But at the end of the year, so if you take the actuals now and you look at the percentage distribution, what you'd find is that, in fact, the capital budget is always around 20%. In some years that we do better, it will be like maybe 21, 22% or thereabouts. So this is actuals. So you always find that very huge discrepancy between what is budgeted and then what the performance of the budget at the end of the year. And in fact, this for last year, So you still don't have the actual budget figures, because if you look at the budget implementation report, the budget office has only released for Q1 and Q2 2024. You don't have for Q3 and Q4. And then there are other, lapses, delays in releasing some of these reports. So I think to your question, much of the bigger issue with the budget is always about how do you even ensure that what is budgeted for is what you spend at the end of the year? What is the monitoring and evaluation process of the entire budget, the government spending itself? I think that is one huge gap. I know Body tries as much to do advocacy on some of those issues, but trust me, I think I've always said is that I think we need 10, 20, 30 budgets in the whole of Nigeria. And it's not just a federal government problem. Going to this states as well. So many things happen at the state level that we don't even talk about because there's no information. There's limited information about what really happens to the state budget. Now, imagine a case where subsidy has been removed. What was shared at FAC increased from about 700, 800 billion to almost 2 trillion, 1.5, 1.9 trillion, almost doubled, more than doubled in some months, and you still can't really feel the impact on the people. So I think there's that very huge disconnect between our budget practice and how budget affects the people. And more worrisome, I heard someone speaking to the House of Rep member. He was saying something, I saw a video where he was saying that each House of Rep member would get something around 1 billion naira, on constituency projects, something like along that line.
There's an issue around those
have 2 billion. Yeah. So I don't know if you saw that. Yeah. So you look at the budget of Smidan, for instance. Smidan, that is a small, medium in chiefs, in different parts of the country, and you're wondering what's the link between buying vehicles for chiefs and then growing small businesses in your region. So many discrepancies, and people are just looking for ways to fund. So for me, those are the core issues. Yeah, so those are the core issues that I think we need to pay more attention to. And somebody was asking me recently whether Nigeria can have a Doge, like what we're seeing in the US. I think we need it. I think we need somebody to shine a torchlight on the budget itself. And it can only come from the president.
We need our own Doge. My second question. Can I go to my second question? Yeah. I think you answered. You cleared my. I was looking at some wrong numbers there. I think I've gotten the full numbers now. So my second question is on a bond rate issue. It's on a bond rate. So if you look at the bonds, the various bonds that the federal government put out, the super bond is about 90.75. The savings bond, 2-year savings bond to about 16, 3-year about 17. The long-term savings bond that just came out about 19.36. So my question is, how does federal government aim to attract enough institutional investors when there are other low-risk alternatives to these bonds in the market right now? I'm waiting for anybody. I'm willing to be proven wrong, but a lot of money market funds, fixed deposits, are doing very well. They're doing higher than 19. They're doing from about 21 to 25. I even heard that MTN commercial papers did about 27%. Yes, you can speak on risk. These are all considered low risk. Maybe commercial papers might be considered, depending on the commercial paper itself, might be considered medium to high risk. But what I'm just basically saying is I think the federal government needs to increase the bonds rates. And my question is now, okay, if we're saying they should increase it, is it sustainable? Is it sustainable to maintain this debt service load?
Well, you can't increase the bond. You increase the bond yield by increasing the MPR, which kills SMEs. So it's both ways. If you increase what investors get, you are increasing what SMEs pay. So it's a double-edged sword. Nigeria needs...
Are you saying that if you increase the bond rate, interest rate automatically go?
Correct. You increase the monetary policy rate. That then affects the rate in the economy. So the banks will take dressing, and pay more to savers and charge more to borrowers. What we need is a lower interest rate. We need to sort of pull back from fighting inflation with high rates and say we're going to focus on growth now. We have to do a balancing. This high interest rate to fight inflation, in my view, is not working because the inflation driver in Nigeria is from the lack of supply of food, not just too much money in the circulation.
I agree with that, Kalu. But how does, looking at the situation right now, how does federal government aim to actually attract institutional investors when they look at the market, they are seeing alternatives that can deliver higher rates than the bond?
Then you don't target foreign investors, target local investors, local direct investments. So that's what you need to look at. Target the locals and say we want to. There's 10 billion naira in DOM accounts in Nigeria, physical dollar cash in Nigeria. That's why Nigeria issued a dollar bond in Nigeria. There is also a lot of
institutional investors. Institutional investors are not just foreign. I'm not just saying foreign.
That's what same thing I'm saying. That's why I said
institutional investors.
That's why I said local direct investments. You don't even need a dollar. There's a lot of naira in Nigeria just doing nothing. If you bring down the rates, that money has still got to be invested. Bring the rates down.
Okay. See, Kalu, look at this picture. Let me paint the picture for you. Okay, you said there's about 10 billion in Nigeria here. If I have 2 billion from that amount of that money, from that 10 billion now, why should I choose to give it to the federal government for that their long-term savings bond that's giving me 19%? Why can't I put it into fixed deposits and money market funds? Money market funds that are giving me 23%.
Because all the rates will come down. Remember what I said? You reduce the MPR. If you bring down the monetary policy rate, all the rates in the economy will come down. Both the rates you get in the bank, in CPs will all come down. The problem with doing that is inflation is then incentivized. There is too much money in the circulation. So you have to either fight inflation
That's why CBN is
correct. So the CBN is trying to fight inflation by keeping the MPR high. But when you keep MPR high, you fight inflation, but SMEs get no loans. So you have to do a bit of a turnaround and say, okay, let's target growth by allowing SMEs get cheaper credit, but we run the risk of allowing inflation to rear its head.
If you look at the asymmetric corridor, the CBN is actually
Ben, don't go there.
The CBN is actually trying to say, give this money to SMEs.
It doesn't follow. The asymmetric corridor is a secondary policy. Yeah. The first policy is what is the NPR. In America, NPR is what? 4%. So every bank
let's not go into America. Let's not compare.
No. You compare America. Ben, I want you to listen, please. You compare America to dollar in America. So they are 4%. They have their SME. So it's percentage is percentage. They are doing 4% there in America because their inflation is 2%. America's inflation is 2%. Dollar MPR there is about 4%. In Nigeria, what's
so they're doing inflation targeting, right? Is the US doing inflation targeting?
Yes, they always do 2%. 2%.
So based on what you're saying that our CPI should not do inflation targeting.
Because it's not, because the driver, or not that they shouldn't do inflation targeting, the driver of inflation in Nigeria is food pricing, which is not going to be affected by inflation targeting.
So the bulk of the job is on the fiscal side.
The bulk of the job is on the military. Inflation in Nigeria is the military situation, not CBN. The military has got to go after the bandits. The military has to go after the bandits and terrorists to take them off. If they take them off, then you can allow food and farmers to then flow to the cities and inflation falls. If you make MPR 100%...
Let me say something on this. Do you know that if you look at food... No, can't wait now. If you look at food, yes, this security is a big issue. There's also a chronic issue of hoarding and...
you only hoard...
double selling. If you buy rice, let me tell you something, Carl. If you buy rice today, normally that rice is supposed to have gone from producer to maybe 1 or 2 middlemen before it gets to you. Do you know that when you buy something like rice today, you'll be surprised to know that 5 people have touched that rice their profit on it before I go to you.
Okay, Ben.
So
Ben,
there are issues in
Ben,
the
we have
market
to allow that. So Ben, I want to just this is the last point you're making. You only hoard what is scarce. Nobody hoards pure water. The reason why people hoard food in Nigeria is because food is scarce. That's why they hoard it. Have you ever heard anybody hoarding pure water or even Arsenal jersey that's everywhere? You don't hoard those things. They are everywhere. So nobody hoards them. But rice is scarce. Millet is scarce. Maize is scarce. So people hoard them because they think tomorrow the price will go higher. So what you have to do is to focus on output, supply side. Get output out. If there's output, inflation in Nigeria will fall because inflation in Nigeria is driven by the CPI is driven by food. Even though they've rebased it, it's still a food-driven CPI. You've got to focus on tubers, plantains. Get that price down, inflation will fall. Right? Perfect.
Very clear. Thank you, Carl.
Excellent. Let's get Sahid in here. Ben, thank you so much. Sahid, you've got the floor.
Yeah, thank you very much. The host, the people on the speaker session, and the listener. I think on the inflation, you addressed it. The Nigeria problem is not the NPR, is the commodity itself. The food is not available. The supply is not enough to meet the demand, and that's the reason why we are having food inflation. And this can be traced to the insecurity in the middle belt and in the north. So if that is clear, I think there will be enough food production. Then with the help of this intervention that the federal government gave 6 months free waiver for importation of maize, rice, and millet, I think that has helped to reduce the price of those three commodities because the people that were hoarding, hoping that it will go up around this time of May, April, June, they find out that the price did not even go up. So instead it was reducing. So they have to bring out what they put in their warehouse and quickly sell. So that's the reason why we are having reduction in the price of rice, maize, and millet currently. So my real comment is when Olumide talks about the GDP, that the GDP has actually gone down. So my question is, the GDP of Nigeria, is it that those GDP eroded? That is somebody that have a car, that have a house in Nigeria. Because of the devaluation of Naira, those houses still remain the same value. Because what Nigeria does is that when the prices changes, they look at the dollar value of that and they use it to revalue their property. So if you want to buy the car that you used to buy maybe 2 million naira before the devaluation, if you want to buy it now, you will be buying it like 6 million naira. So that means as the naira is the value, that particular asset does not devalue. So you are not buying it cheaper from the rate it was. So that will now call for rebasing of the economy. So if Nigeria GDP is rebased, we'll be talking about 400 or 500 billion dollars, because the value, the resources are there, the production line has not diminished. What actually changed is just the exchange rate. It's just the exchange rate, which if Nigeria decided to peg again and say, okay, we'll continue to exchange at 800 naira to the dollar, like the way they were doing before, and which we were using to calculate our GDP, we would have gotten the same result or more.
I'm not sure I'm following your
But
direction. Hello, sir. I'm not sure I'm following where you're going to. Could you just try to make it so I could? What's your point?
yes, what I'm trying to say is that the GDP, Nigeria GDP, did not actually shrink in the real sense. It's just that the exchange rate they are using to calculate the GDP is what was devalued. So if the government finish their rebasing that they are doing, Nigeria will bounce back to the value of our real GDP.
So let me ask you a question.
Production line.
Let me ask you a question. Let me ask you a question. Why do you think they had to devalue the naira? Why do you think they devalued the naira?
They devalued the naira because we are pegging it before, so they have to allow it to float.
Yeah, but why?
So that the naira will find, because there's no dollar to be paying subsidy on naira.
So why was there no dollar?
Which we have been doing before.
Why was there no dollar?
There is no dollar because of two things. The export of oil productions were below the target of 2 million that they projected under Buhari.
Brilliant. So the oil output fell, right? You agree?
Yeah.
So when the oil output fell, the economic revenues fell. That's that quote unquote GDP that you are talking about. Not saying the output is GDP, but because the output of oil, which translates to the dollar coming in, fell, that's why your economy also reduced. We didn't have money in the government to pay for the same things we were paying for before the oil fell. So that's why you see the GDP output reduced. Just like you, if you are earning 5 million naira in 2014, then this year you are earning 1 million naira. What would you do? You reduce DSTV, you reduce holiday, you reduce buying your second car. So your output has reduced. That's the thing you are calling GDP. That output reduction, it's because your sales fell. So whether you rebase or you don't rebase, the issue is that oil that you are selling, that's your gari, that's your whatever you are trading, you are not selling enough. So you have to reduce the size of your economy to compensate for that loss of output. That's what's going on, sir, as you just explained to us succinctly. Hope that makes sense, sir.
Yeah, thank you.
Perfect.
Yes.
All right, let's get Francis in here. Said, I appreciate you, sir. Francis, let's get Olisa Mecca. Olisa Mecca, you've got the floor. Your hands is up. Please go ahead. Ask your question.
Okay. Good evening. My own take is not really a question. Like, I really want to chip in on what has been discussed based on the macroeconomics.
Okay.
So, like, I think from basic secondary school economics that I understand, inflation is when too much money is chasing few goods. That's demand. Like, inflation is always engineered by demand. But looking at Nigeria's case, for example, inflation is not. Our inflation is not demand pool. It's actually cost of production. It's cost of production.
Say that definition again of inflation. Say it again. The one you just say that your definition again. Say it again. You just define inflation. Repeat it again.
The definition of inflation is when there are too much money chasing few goods,
Good.
like demand.
Good. Few goods. That's the problem in Nigeria. Few goods. Not the money. The few goods.
But that's like in case of Nigeria, like that's actual definition of inflation. But in Nigeria, it's not really a matter of too much money chasing few goods. Like, our inflation is not actually caused by high demand. It's actually caused by high cost? What is
No,
making
no, no,
us
no,
look
no,
like
no,
we
no,
have?
no, 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 no. You define inflation, then you go against your own definition. Your own definition said too much goods, few goods, right? Your own definition, and you are correct. It's the too few goods that is our problem. We don't make enough rice, enough diesel, enough MTN. We don't make enough things, so there's too much money chasing too few goods. That's the problem in Nigeria. That's too few goods, sir.
Like what I'm trying to explain is not like guess in this sense. I know like there are few goods, but it's not really the demand that is actually pushing the prices of things to go up. That's the reason why the MPR policies are no longer working. Because I think it was like an issue of like so much money. The monetary policies would have been able to like interest rates would have been able to like tackle the inflation. But the issue is cost of production. That's the reason
But why
our
you
cost.
I'm agreeing with you, but why are you jumping to cost of production when you have already addressed it?
I'm trying to like tell you like the causes of like one of the reasons why the monetary policies are not working, because the NPR is actually it is meant to tackle the inflation, but it's actually stiffening the economy the more. Because like I think in economics too, there is something we call a period of like when you I think it's in the demand curve, there is something they call like a period of diminishing returns. I think the NPR has gotten to a period of diminishing returns, but it's a stage whereby it's like when you are producing, let's say you have your inputs, so let's say you add 5 inputs, you get 10 outputs, but it gets to a point whereby even if you keep on increasing your inputs, your output will no longer be increasing, your returns will be diminishing. That's what our...
Okay. No, I agree with you. I'm just saying, I'm not arguing, I'm just saying that inflation, like you've rightly identified, in very, very simple terms, is too much money, too few goods. Now, why do we have too few goods? Again, you've been clear, because cost of production is high. So you are completely correct. The problem is that because it's expensive to produce in Nigeria, we have too few goods, which means we have to import. But when we import, our dollar gets weaker because we're importing. So I read a report, it's cheaper to import from India, that rice from India to the port in Lagos, than to take it from Kebbi to Lagos State. Agricultural value chain, roads, no rails. Kebbi using 40% to generate power. So we have to fix, like you said, the inputs in Nigeria. So we bring the cost of production down. Otherwise, we can't take advantage of the naira. It's cheaper than dollar, but we don't take advantage of it. So completely agree with you on point there.
So just like you said that it's cheaper to import from India than to when the product has actually gotten to Nigeria, it's cheaper to import it all the way from India than for us to circulate around Nigeria. That's like still based on what I'm trying to say. Like I think also that like our inflation is not because of there is too much money. The too much money in question is not even actually in the hands of the masses.
No, but you're agreeing with yourself and disagreeing with yourself. I'm saying that you are correct. Inflation is too much money chasing too few goods. You are correct. Now the too few goods you have is because we're not manufacturing in Nigeria. That's the point I'm making. I'm trying to correct just to align your thoughts. The problem is too few goods being manufactured in Nigeria. Why? Because manufacturing in Nigeria is very expensive. So that's why you have the too few goods. If you wake up during Christmas, rice price is going to go up, chicken will go up, oil will go up. Not because there's too much naira during Christmas, but the demand goes for the few rice, oil, and chicken during Christmas. If you come to the States during Thanksgiving, the price of turkey is the same. Not because Americans don't want to increase the price of turkey, but there's so much turkey that if you increase the price of your turkey, you wouldn't sell because all the stores have turkey. But in Nigeria, not all the stores would have chicken or rice or oil. That's the point I'm making. It's demand and supply. If you have supply, prices don't go up. That's the point. Supply is what brings prices down. What we call competition is supply. Competition brings in new supply that moderates price increase. The velocity of price increase in the economy is moderated when there's supply in the economy. That's the point you are making.
That's the point I'm making. I want you to like just calm down and get what I'm trying to do.
Well, we've gotten what you're saying. We can't stay here forever. We've gotten what you're saying.
No. Like you said, the supply is what brings down the price. Or I'm also giving you like the instance you gave. What is actually making our price up is not just a matter of like where do we get supply. It's a matter of when we get the supply, the cost of moving it around. Like you said, it is easier to import from India. It's much cheaper to import all the way from India to Lagos. But moving it from Lagos to Kano, it's more expensive than bringing it from India. And I'm also trying to say, like, the reason like why our monetary policy is like the interest rates hike is not working is because number one, the money in question that they are trying to reduce by increasing interest rates, that are trying to like reduce spending by bringing down like the amount of too much money chasing goods by increasing interest rates, is not even actually in the hands of the masses. Corruption is like the money is in the hands of a very few. Like someone earlier said that the GDP of Nigeria, that Dangote, Rabi, Eranu, and the other dollars, like their wealth put together is almost 13 to 20% of the GDP of Nigeria. So that's to show you like the whole money we're talking about is in the hands of very few.
Okay.
Then secondly,
we got to go to
secondly, if I believe that we are no longer supposed to increasing interest rates. We are supposed to look at ways to begin to drop the interest rates. Why? When you drop the interest rate, it triggers the internal economy. I think we are at the stage whereby Nigeria needs to begin to look inwards for solutions, not looking for FDIs. We have to start looking for like domestic investors. We have to begin to reduce the interest rate in order to increase borrowing for the internal economy. I think we've gotten to the point where we need to rejuvenate our economy. That, like what we're experiencing now is not very much different from what Japan and China experienced in the 90s. Japan had similar issues. What did they do? They kept on increasing interest rates. It got to a point that they decided to crash it. Today, they are around the top 5 biggest economies in the world. So what I'm trying to say, like, I think we should start looking the problem is not just actually NPR. The problem that is causing our inflation is more of fiscal policies, security, reducing the interest rates, and energy. Looking for inward ways to boost our energy. Because
all right. I hear you. Good point. I completely agree with you. Completely get it. Yeah. All right. Appreciate you being. So just get us to speak, sir. I'm not cutting you off. Agreed? Gotcha.
Okay.
Thank you, sir. Let's get Francis in here. Francis, you've got the floor, Francis.
Yeah, thank you, Mr. Carlo. Thanks for this space. It's really, it's been an enlightening moment for me, and it's something that actually got my attention today. Right? It's I saw Pakistan allocated 2,000 megawatts of electricity just to Bitcoin mining, like AI data center and all of that. Right? So I'm trying to like say, because if you look at what we are in, the situation we're in now, is that we're not producing as it were, right? And insecurity issue is also there, right? And one of the things I also believe that can also grow the economy is also when we also encourage local investors. Like someone actually said in this space that some kind of money that are available, right, that need to be distributed into the economy. My question would be, just to Mr. Olumide, if he's still here, how can we boost the investors' trust, to invest back into the economy and all of that? And also, look how interest rate. Interest rate is it's too high. Like, interest rate is too high. How can we actually beat this thing down? And how can that actually also encourage, we have manufacturers in Nigeria that are, packed up because of the whole scenario of inflation and all of that. So how can we actually encourage these people? And I know Buhari 8 years was something more like so many unpleasant things happened, right? It was more like a mess because we went back a lot, right? So how can we boost investors' confidence to invest back into this economy, right? And how can that also translate? Because we can also want to move forward if electricity, if security and other key infrastructures are not, are not boosted up, right? 2017, 2027, it's close by, it's already at the corner. And, to me, I believe that governance is key to all of these things. But how do we encourage it? How do we see play our part as citizens, right? So even those of us who knows investors that want to invest, how do we also encourage them to do that, right? So yeah, that's just my question.
Olimde is asking how we can boost investors' confidence, folks that are in the abroad. I mean, what do you think the government can do to boost?
Well, I think all the things Wilson said, on the macro side, I think we just need to address the micro issues, despite the fact that the topic is macro, because looking at the economics report, for example, it casts a dark side, because I recall I was with my colleagues and they were like, can I explain how a oil-rich country like Nigeria has 97 million people without electricity? This is a country that has two major seasons in terms of raining and sunshine, and it's not that we have winter or we are at one part of the pole where we don't have sun. So I had to explain the intricacy behind the fact that the federal was just controlling electricity, the states could not invest, and we invest in things like guest houses, state ports, things like that. So it really has to do with the optics, and I think the president really has to work on that too, because another problem I see in this administration is, despite the fact that we have some positivity, they don't know how to sell good things, and the bad things keep selling, because the people they put behind selling these messages, they end up trolling both the media and the antagonists. So at the end of the day, it now gets distorted, because if you look at the number of times Bloomberg have written about Nigeria, look at the pros and negative, for example, look at it, it's more negative. I was trying to do the correlation, look at graphs. Most of it is been negative. And it keeps going on and on. So I expect the fact that we need a serious-minded economic team, maybe from the Ministry of Finance, to be addressing the president's policies, so that we have consistency. Secondly, the marriage between the fiscal and the monetary side is not there. Wilson said that, some of the speakers said that there's no cohesion. Sometimes Cardoso speaks and you wonder whether the fiscal side are on champagne. And also, we also need to have a streamline of the processes. We have 53 ministers, Kalu. I've been writing on the Nigerian market for God knows when. I can't mention more than 10 ministers without using Google. And it tells you how despite the fact that we have more than 55 ministers, some of these ministers are puppets. For example, Agriculture Ministry, can you mention one policy that the Agriculture Ministry, the last time I heard about the Agriculture Ministry was when they opened the cocoa pod, and that was even tech meeting and things like that. But it has been very quiet. The Marine Ministry, God knows what is happening in that place. So apart from the interior, maybe probably aviation, maybe you talk about finance, because definitely coordinating the economy, Foreign Affairs Ministry, you really can, the very scanty. So for me personally, from the optics, Nigeria is not shown the way one expects. But Dangote refinery is really exciting. I was so happy when the most powerful man met with Dangote in Qatar. That was so big. The news, the bet is that maybe Goldman Sachs or Morgan Stanley is going to be the major underwriter for Dangote listing. That already has cast a positive light. I'm expecting the Nigerian stock market to hit 100 trillion naira with the listing of Dangote or the petrochemical. With the petrochemical, NNPC needs to do better job. They really need, yes, new management, but you see, the problem about outsiders is that they really don't understand our internal politics. They categorize us as the same thing. So I think NNPCL should not just come with projection. They need to come with serious reforms. Are they settling themselves to the market, or is it going to be continuous, the same thing? Then the billion spent on the refinery in Port Harcourt, I expect the president to address by Budi, because some of these finances happened under him and under President Buhari. So they belong to the same political party, the same. So I expect the fact that we need to really understand what is really happening here. So, until we see the optics change, I feel that foreign investors will just treat us more like when it's juicy, they come in. When it juices out, they go out. Unlike you see what is happening in the South, you look at what Donald Trump is doing in the Middle East, you look at the investment moving in and out. These are FDIs, these are not just hot money. They're seeing billions of dollars invested. Donald Trump got a promise of about $3 trillion investment. And I can assure you that we are already seeing impact. You see what the Saudis are doing in AI. You see what the Qatars are doing with LNG. So we really need to make use of our brains, export, and encourage remittance. Remittance used to be our saving grace. Yes, remittance is doing so well, but I think we're not utilizing places like America, Canada, and intentional. That's why I'm not so happy with the Nigerian Diaspora Commission. The only thing they really focus on is welfare or people. They need to also focus on professionals. There's so many Nigerians within PhD. There's so many Nigerians working in Google, Microsoft. You need to create an agency that has data professionals in this key market. That's what the United States State of Department is doing. They don't just open to foreign affairs. They use the ministry for training. I think we really need to do those things, Carl. Until then, man, we just
Great.
pray.
Thank you for something you shared.
Francis, great point. Yeah, I want to just ask this a quick. No,
just 30 seconds. Just 30 seconds. You talked about remittance and everything. If you check the remittance that come in, many of them is always for welfare economics, right? Just to take care of the basic. What if we have, like you said, an agency that can come in that makes sure, okay, if we're having maybe 2 or 3 startups that can actually work in the line of the infrastructural development that we're looking at, I think that can actually bring a boom too. Not just to just bring money, just to take care of the basic welfare economy. Yeah.
Yeah. Look at America, for example. I was trying to look at why UK's remittance is stronger than that of America. Yes, close ties, the banking community ecosystem. You cannot debate money points, LEMFI impact. Nigerians are very cultural with UK than any part. I'm talking of Western. But we are also missing from the quality of inputs coming from Canada and America. Nigerians are growing there. But you find out that rather than seeing business lines being built, and unintentionally, America has a very strong regulatory requirement, so it's not so easy for banks to just penetrate that. But even having said that, one expects the federal government to really take California, Texas, New York, all spots where you see a lot of Nigerians, try and create a form of a system or an arrangement where we can export talent. Because you see, my problem with Nigeria is that we are not investing in human capital, and those that are generating a significant amount of inputs in many markets, we are not utilizing them. For example, the billionaire calendar guy, we don't really know what he's doing. There's no inputs in Nigeria. I've not really seen so inputs. Latest data on Bloomberg shows that after America, Nigeria is the next country where most African startups come to raise money. But we're not seeing that implicacy where the coordination. So I expect that we have an agency, and that's why I say that it's not just about traveling first class, going to US, talking to IMF. No, the world has gone beyond that. There's a relationship. We need to create an ecosystem, and that's one of the things America understands. Relationship is one of the benchmark of investment banking. Networking is one of the benchmark of finance, not just technology, not just bagging, certification, not just going to school. You really have to have that relationship. If you don't have that relationship, how do you push those things? So we really need right-minded people that understand this market, create all these things. It's possible, but until I feel like until we get intentional with this thing, we'll not utilize all these advantages we have.
All right, well said.
I'll drop my thank you. Thank you.
You're welcome. Go ahead. Okay. I had a question for you, but go ahead and I'll ask you a question.
Okay.
Doctor, you can go ahead. Dr. Wilson, go ahead.
Yeah, you can ask.
Okay, yeah, I was just saying, in terms of policy recommendations, is there one or two things like can have the greatest stimulative effects, like a policy or something that Nigeria can do that we can see the effects in, say, 6 months to 9 months, Is there any quick wins there, or a policy overhaul you think Nigeria can do is low hanging that we can grab right now, sort of to ameliorate most of the issues we talked about?
Yeah, so very interesting. I think I'll answer that, but let me quickly just touch on some of the issues I've heard, so far. Like, I know there's been talk about diaspora bond, how do we, when they talked about remittances, how do we get, people living abroad to invest? But I still think that, particularly on money that comes into the government coffers, I still think that if we don't fix the link between money that comes in and how that money is spent and the process through which that money goes out for projects or for citizens or for businesses, if we don't fix that, all of the channels that are involved, whether it's the procurement process, value for money, accountability, monitoring, who gets what, is it for the real purpose, fixing the budget process entirely. I think if we don't prioritize that, there's no way we can see the maximum impact that we would have, whether. So that's why here when government says we want to fix or spend XYZ billion on a refinery or on a particular road and all of that, the question is that money really getting to that project itself, or people are just using that project as a means to, move money into their private account?
Yeah.
If we don't fix that entire system, we would have a budget of 100 trillion. People will not feel the impact. Only just a few will, and they start investing in real estate and, taking the money out of the country. So I think that's number one priority, which is where, that question on Doge that I said somebody asked, I think that for me should be the number one. In fact, it should have been the first policy that the government takes on board before even removing subsidy. Because the argument is government is broke. We're paying this money to some people who claim they're importing fuel. Now, government has had the money. Government is, rich. I wish you could see my hands now, my two hands in quotes, rich. But how is that same money getting to the people or getting to key areas or critical areas of the economy? So it just means that we've transferred cost from government directly and we've thrown it at majority of the citizens and we've asked them to bear the brunt. And now government is smiling and the people are suffering. And we're saying government is giving money to states and people are not seeing that money in their pockets or is not being used to deliver infrastructure, education, and all of that. So that linkage, I think, should be the number one priority that we fix, in the next 1 or 2, 3, 4, 5, 6 months. And sadly, again, it has to come from the president. It cannot, either it comes from people going out and voicing their anger and putting that pressure on the system and the political leaders, or the president decides and says, look, I want to do this. But again, we're coming, election is coming, everybody's thinking, as to how to build their political base and all of that. So that makes it a bit challenging. But if we're really serious about reforms, that is what I think we should do in the short term. So somebody mentioned, I think Ben mentioned something about why would people buy government securities when commercial papers are a bit more expensive. I think you also even answered the question as to the risk involved. I mean, you are buying an instrument on the faith of the federal government, and even some of us are even a bit skeptical when it comes to some of these companies. I'm not mentioning any name, but I would rather let go of a 1-2 percentage points difference and buy something that I know returns are strongly guaranteed. The other question on inflation targeting, I think this is very, very important. The question you asked about why you said something about the US doing inflation targeting, why shouldn't Nigeria do the same? And I think context is very important. So most times when we listen to some people speak, people who are outside Nigeria, or even some of these institutions, international institutions, we just take things, copy, and then we want to paste it in a system without really understanding our own local problems and how what we are pasting, does it really fit or does it solve the problem? And that's why I think we need local, homegrown research institutes, individuals that can really dimension Nigeria's problem and provide clear solution rather than saying China did it, Japan did it, US did it, UK did it, so we should do it. I don't think that approach has worked. I don't think it will work. Specifically on this inflation targeting. Now, this is an economy where almost everybody is very connected to the financial system. You know, your credit card is there, your mortgage rate, everything. Once interest rate changes, you can feel it as an individual because financial inclusion is very high. Everybody's involved. But is that the same with Nigeria? And Carlo mentioned in some places they still do trade and barter, trade by barter. They still exchange goods for goods in this same country. So my point is, look at your economy. Does it fit? And by the way, let's even assume it fits. Let's even assume we are the US. Let's assume we are the UK, and we want to do inflation targeting. Inflation targeting is one of the most hard things to do because it is backed by science, economic science, and modeling. That the first starting point you need to do is what is the threshold of inflation in Nigeria? That's the first starting point to say, look, we've said inflation is too high. You know, at what point is inflation? What is the midpoint that inflation is at this figure? And that's the figure that you would say, oh, inflation is good for growth or is not too bad for employment. You need to find your inflation threshold. In the UK, it's 2%, and then they have plus one minus plus and basis point gap around that. You know, in many other economies, I think in the US, it's also 2%. That's your inflation. You know that if inflation is at 2% or around that figure, you are comfortable. In Nigeria, can you tell me what the figure is? Go to Central Bank website, check everywhere. I can give you that then as an assignment. Go and check it. What is Nigeria's inflation threshold from the central bank? This is not something you would have in your pocket and you keep it and you're working with your economist and you're saying we are checking. No, this is something you release publicly for transparency. Now, that's the starting point. The next level is for you to forecast inflation in the next couple of years to say, based on our model, we've seen that, for example, our inflation threshold for Nigeria is 15%. That's what our model has told us, that we need to have inflation at 15%. Now, the next step is how far are we from that 15%? So you do a forecast with your economic models. You look at the budget, 54 trillion entering into the economy. How will this affect future inflation? You run your model and you come up with an inflation path where inflation is, for instance, in 2025 is going to be 20%. 2026 is going to be 21% because government will spend more. 27 is going to be 25% because oil price would affect exchange rate. You know, you have that path, almost like an upward trending path of inflation. And remember, you already have your threshold. The gap between your threshold and that your future path, that's how much you need to adjust interest rates. So you can see everything I've explained to you is not by saying, I want to do inflation targeting and I must do it, and you just keep raising interest rates. It's science, it's evidence, and all of these need to be made public. I can go to the UK Bank of England website, download documents, and I'll see just go to ONS, and you can see their predictions of inflation in the next 5 years. And you can see the path that the Bank of England has set and say, look, this is where we think it should be. This is how much we think we would adjust interest rates to ensure that we bring inflation down to that threshold. That's the science behind policy making that I think, I'm not sure. I hear the CBN will say, of course, they have a model. They've invested a lot in it. But disclose this thing, bring it out. Let's engage. Let people see and interrogate and know what needs to be done and all of that. Because everything you're seeing is science-driven, you know. And I don't think we've maybe done that, at least from the best of my knowledge and what I see, you know, in public. I don't think that's the kind of discussions we're having, you know, as to inflation targeting. First of all, do we really need it? Second of all, even if we want to do it, are we doing it the right way? So I think that's part of the conversation I would have. Otherwise, every other thing the CBN has done on exchange rates, you know, FX inflows coming in, I think the CBN has done a lot of work, you know, clearing the backlogs and all of that. But perhaps this is one area that just needs to be tweaked a little bit. Then Saeed mentioned something also important about rebasing. I don't think we should get emotional when we talk about Nigeria and saying it's because dollar went to 1.5. That's why our our economy is dropping. That GDP is now $200 billion because they devalued or exchange rate depreciated. So that's why we are now far from 1 trillion target. And Carl rightly mentioned, why did dollar go to 1.5, 1.6? Why? These are clear evidence of structural problems that we've had in the economy that we have not solved over the years. Reliance on commodities, being exposed to vulnerability, oil being stolen, mismanagement with FX gaps between official and parallel market. These are the real issues. The same problem we faced with COVID, Russian war, other oil producing countries faced them. South Africa went through their own phase. But then they're still, the largest. Why is Nigeria different? We're not isolated from what's happening elsewhere in the world. We're saying this thing has not been properly managed. So we are victims of our actions or inactions. And so let's not start saying it's because dollar went. Why did dollar go to? Is it not other countries that you would see? There's depreciation, of course, but is it at that magnitude? So in my view, let's not try to, say it was due to dollar or something like that. I don't think that's the best approach to look at it. And finally, you said something about rebasing. If we rebase it, the essence of rebasing, I'm sorry to say, is not to increase your GDP by XYZ so that you will achieve $1 trillion. That's not the reason why people rebase their economy. They do it to capture areas of the economy that are not, maybe for one reason or the other, initially captured. And so, when Nigeria did rebasing in 2014 under Dr. Yemi Kale, GDP increased by 89%, and we got to, I think, $520 billion then, And mind you, the last time the rebasing was done then, we were using the 1990 base year. It took it from 1990 to 2010. So we had 2 decades, 20 years of, using the 1990, and so he shifted that. That's a long time. Now, we're doing a rebasing. It's less than 10 years. So I don't think we would see that 89% increase that we saw under Yemi Kale. And even if we did, we see an increase of 89% of GDP. So current GDP now, as at 2024, it was 269 trillion. Increase that by, say, 80% or 85%. Let's at best, we get a 500 trillion naira GDP. Convert that to dollars. It's still $323 billion. 323 is far below what we were in 2014. Even if your GDP doubles as a result of rebasing, you will still not see that dollar increase as significant, to get us to where we were in 2014. So let's not say, I don't think rebasing, and I don't think that's, we should use rebasing to help us achieve $1 trillion, or say that GDP is low because it's because of dollar. Because of exchange rates. I don't think that is a valid argument. And finally, a drop in per capita income, right, to $766. I don't know whether we understand how severe that is. $766. When 10 years ago, or like Kalu rightly mentioned, we're somewhere around $3,000 or even higher than that, and now we are $766. And we're in a league where, whether you like it or not, we're in a competition, we're on a race with other countries. We want to be XYZ largest economy by the only way you can measure that is in dollar terms, because countries are all going through the same problems. If you don't want to weaken your currency or to devalue your currency, then strengthen your non-oil exports and increase it to $100 billion. When turbulent times comes, you have enough reserves to protect your currency. So for me, those are issues that we should not, in a way, whitewash and make it feel like it was just because of that policy. That's why we're in a bad state. And on the point of how do we get out of this, for me, the most important thing, apart from the budget, review and all of that I talked about earlier, we need to move away from this idea of I'm thinking of the best way to put it. It's not just about GDP or macro stability now. I think we need to move the needle a bit higher to talk about an investment-led growth for Nigeria. I think it has to be an approach that requires, whether it's monetary policy, fiscal policy, trade, industrial, everybody is coming together and saying, look, it is investment that will take Nigeria out of the mess that it's in. So almost shifting away from all this consuming, importing, to that productivity-led growth, like a productivity job creation strategy for Nigeria. That's where I see us, making long-term structural reforms. We're looking at, industrial policy with discipline. We're looking at investing in the civil service to build state capacities for reforms. It's not about when an institution just comes and says, Nigeria, do this, we rush and do this. They'll say Nigeria is services that will drive your economy the next 10 years. Nigeria will start saying, yes, services. We don't do our own research to think that can services take us out of this problem that we're in? Do we need industrial sector to grow and thrive? We're seeing Lagos, Ibadan, Kano corridor, rail line connecting places, shipping, exporting. Non-oil export is growing from 11% to 20, 30%. Manufacturing is going from 2% of export to 15%. I think that's where we need to move away from. As it is now, the informal economy is 93% of Nigeria's employment. Many people that are just doing petty trading, ride-hailing, Okada, those are the very low productivity jobs that majority of Nigerian workers are doing. People selling stuff in front of their house. You cannot get anywhere with all those kinds of jobs if that kind of job dominates your economy. So we need to grow that private sector base, invest in critical sectors, manufacturing, construction, and all of agro-processing, all of those sectors that will create jobs and employ people and give them better earnings. So that's why I think much of the reforms will go into, along with, many other things that the human capital that Olumide talked about,
Wow.
export diversification and all of that. So those are some of the thoughts that I have. And I would say that we're putting together a report at the NESG where we're looking at the real fundamental issues of productivity and jobs in Nigeria. And in fact, I can assure you that it's going to be massive, and hopefully it will be the start of an advocacy campaign to get us to make the right investment in the right areas so we can all at least be proud, be even more proud of our country. Thank you.
Well, Doc, that was packed. That was a response and a half. That was really, really packed. I was afraid that you were saying that, then you go. So, just permit me, sir. We have 5 people here that have been here. That just want to. I just made them ask their questions. Then I can let you go. I think it's gonna be Perception would go first. Then we'll just go Cliff, Oluwaseun, Reynolds, and D Rani, and then we'll just really just appreciate you. I think that was a very, very good summary that you just gave. So let me get to Perception. We'll just these 5 folks, and then we'll just let you go, sir. So go ahead, sir.
Thank you, Carlo. And Wilson, you really covered a lot. Thank you very much for those words. Can you all hear me okay?
Yes.
Yes, yeah, I can hear you.
Okay, even your comment actually covers some of the questions I want to ask, but I think I still have this outstanding one I want to talk about. And it's about our human capital development, how we improve the productivity of our people back home. So in terms of the policy framework that you're talking about, that maybe government or even as a nation, because the issue from my end I discover is that what we just have is politicians. We don't have leaders. We don't have people that are actually putting in place those policies that will live like 50 years, 10 years, even 5 years. So people just do things for now for the political convenience, and that is very bad for us. So my question would be on the productivity aspect of our people. So if you look at what we have as of now, we are in a very awkward and horrible era in our country, where the lots of people, like the larger percentage of our young people, are more interested in social media skit making. So people don't really want to go into those productive aspects of the economy that can even engineer the revenue we're looking for. Lots of people are more interested in doing skits and getting social media clicks and impressions that can get them paid. So how do you see a policy of government that can actually incentivize vocational studies, creativity among people, getting people back into productive economy? If you look at other countries, especially in Asia and Europe also trying to compete now, you see the way they are intentional about their people getting into tech and how to use it to go into their next future. What do you think our country can actually do to work in this area and get our people back productive and possibly get us competing in a few years to come? And that's just my question.
Doug, you want to take that?
Oh yeah, I was muted. I was speaking. So I think first of all, there are two ways to this, and to be honest, I don't really think that maybe I still believe a lot in the creative economy. So I wouldn't necessarily, say that skit making and all of those things are bad. I mean, I would see it as part of it. People do it. Some people make money out of it. In fact, some people earn foreign currency and all of that. Some people go into it because there are no formal jobs, right? In fact, if you look at many people in the informal economy, it's not that they like it or they want to be riding keke or like they want to be riding Okada. Or you just want to be selling something small in front of your house. Or you want to be hawking. I don't think some people do it because of lack of alternatives. And so my sense would be that we need to direct people in those areas that are very, very productive. And part of that, a big part of that has to do with the skills development system. Another aspect of it has to do with education, right? And education is not just about getting people into school, even though we have problems with out of school children, right? Education also is about ensuring that they learn, even at that very young age, right? In fact, I was looking through, Carlo, I don't know if you've seen that general household survey that the NBS released. I think it
was 2 years ago. Yeah, I did.
No, there was one they released this year.
You can send to me, sir, just in case.
Yes. Yeah,
I think that has a consumption numbers as well. I know I did see one that had that was talking about also the consumption numbers, education.
So this one has education, it has poverty, it has healthcare, access to so many things. But it's the latest recent one that they just released. Very, very interesting insight. So if you look through, what you find is, so let me just quote some of the stats. It says among children that are aged 4 to 6 years, only 46% can name at least 10 letters. Just 39% can write 3 letters. Only 43% can count 1 to 20. So many children are in school, but they are not even learning. Just very few are really learning. And you might say that, well, is it not primary school or is it not pre-primary school? But you know that this thing the problems even linger as you go up the ladder, as you go into early secondary, you go to SS3, and because by the time you get to that level, what you should be doing at that level of education is more sparking your creative mind and more problem solving. You're getting communication skills, you're getting learning about so many things, the world, the global economy. You are able to process things very well because you have a very good foundational level, at foundational background at the primary level. When you miss that, it's hard for you to pass JAM because at that primary level, you missed out so many things. You get to secondary level, you are struggling. And then we're celebrating that XYZ number of people are failing JAM because it's very hard. It's a fundamental problem, or because they are not prepared. It's a fundamental problem that has to go all the way through the education value chain. And so how do you then prepare creative minds people that would think about AI, machine learning, coding, all of those things when you've missed it at that level. So for me, we have to go back to that, education part, training teachers, education for, having very interesting equipment to do very interesting things. I mean, my wife works in a primary school. She teaches in a primary school in the UK, right? When she talks about what they do to children with maybe some learning challenges, you have your sensory room, you have so many things, and you're just wondering, everyone is being carried along. At some point, it could just be the color of your sheet. All of the people with dyslexia, and it could just be like maybe you're writing, you're good. If you write on a yellow paper, it helps you assimilate more than when you write on a white paper. As little as that, so I think that foundational learning is key to anything at all that we want to, do as far as education is concerned. Otherwise, we will just create a system where many people will be left out, and then only few will be carried along the development process. So I think that's one thing we need to do. And then this idea of skills training, we have to invest a lot in it. In fact, I was saying we need a national skills development program that is chaired within the presidency, and the president sits on it and says, look, this is my program. I want to develop and train XYZ number of, whether it's engineers, whether it's, people across different professions, that will lead and drive innovation in Nigeria in the next 5-10 years. We have to do it. Otherwise, it will just be a case where people will just keep doing anything to survive. And even, I was speaking to someone in the leather industry recently. She does leather, makes bags. And she was telling me how they give the Senegalese in Lagos. They go to the Senegalese. There's a market there where they go to them. Those are the guys that know how to do very skilled leather, And you can imagine all of the textile factories that have shut down in Nigeria over the years since the 2000s, because of issues of power, infrastructure, so many problems. So I just think that skills part is the easiest for Nigeria with large population. Is one of the easiest way to lift people out of poverty. Instead of us calling plumbers, and then what annoys me is when they paint your house and then you see your doors littered with paint, you call a plumber and then they just keep doing things. I just think we need to take it very serious. Otherwise, we will just keep, going in circles, and that's real development we're looking for may not even happen in our lifetime.
Yeah.
So skills development and formal jobs, jobs in manufacturing, jobs in that are well paying, at least mid-level to high-level productivity jobs is what Nigeria needs at the moment.
I agree, and the educational point you brought about is so critical. I did a poll on Twitter, and I asked people, if a country focuses on education or infrastructure, which would have a bigger GDP in 25 years? Some were picking infrastructure, and I was struggling to explain that it's education that provides the impetus to then train the skills that should build the economy. Now, the Chinese built China. Americans built America. You can't have infrastructure without having the people that can build physics, build a bridge, or biology, nano, or build the nanotechnology. So we seem to think that the development will come without the education. And if you look at the education in Nigeria, you get scared about what's going to happen in Nigeria in the next 10, 15 years. If so many kids are not going to school, you then wonder who's going to pay the pensions for us when we get older.
Carlo, there's just a few weeks ago, in the course of this jobs and productivity report that I was putting together, so I was speaking to some stakeholders just to get their views. One of them shared something. She said, in a state in Nigeria, I don't want to mention the name, she said, because she works in the agro space, one of the largest agricultural companies in Nigeria. So she said, in a state, there are so many tractors. The government decided to bring in tractors to get mechanized farming, get farmers to use machines. They said the tractors in some areas in that state are lying down there because they develop fault and there's nobody to fix them. The people don't have the skills, the engineers to really do this thing. So you fix it, it breaks down. You fix it, it breaks down, and then all of a sudden, what you will find, if this continues, you will just see is a truck, many tractors just lying fallow because nobody can really fix them when they go bad.
That brings it home. You have the tractors, but you don't have the mechanics that can fix tractors. So you go back to hoe and cutlass because you don't have the skill level. It just brings it home. Yeah. Well said, sir. Let's get Dirani. Dirani, you've got the floor.
Yeah. Good evening, everybody. I'm really glad to speak to you. I've heard a lot, and there are so many questions. I'll try to be quick. You mentioned, the professor mentioned the investment as a means or as a way to improve the economy. I wonder if the investment could really find jobs for Nigerians. Especially when I hear investment, I feel that it's a foreign investment, like a foreign company or a foreign country like China or whatever, trying to invest in. So what really what's the percentage of Nigerian job seekers who would? No, that's one question. And I have a very quick note. Aside from that, the value chain. That really sounds a great expression. The value chain. I feel that every country has a problem. The citizens of any country has a problem in determining where is the value. In Lebanon, we have for example, when you want to buy a chocolate, okay, you find kinds imported from Turkey, from Europe, and you have also a national chocolate. But I wonder why would people would ever want to buy a foreign. That's a problem in determining the value. Our value should not be chocolate in the first place, but it's okay. If you want to buy chocolate, go ahead and buy a national one. Actually determining the value, I think it goes beyond. It might go beyond our imagination. It's not about AI and the fascinating new tools that come to our life without. They come without asking for. We just find them there, like new phones, is that really a good value? So there is a problem in determining the value, and I think it lies in communication. Communication is the key word in everything. It's the key word in for any true growth of any nation. It's the communication between those who take care of the school, those who take care of the universities, and those who take care of the businesses. Is there a true communication between these three sectors? For example, so the communication is everything. Perhaps someone really mentioned maybe that the prices go up when there is a high low supply, maybe. But even in that case, I think there is the true notion, which nobody really tackle, is the trust among the population. They can decide if it's really that the population should decide, and not really the government or anyone or anyone who is willing to compete, like in competition. It should be the population who decide the price of things in general. Yeah.
I'm not sure if I'm following. So just to be clear, so like in a marketplace, just to ask a question to clarify, in a marketplace, is the market that determines the prices, right? Not the government setting prices. So the price of an iPhone, for instance, is determined by the demand and supply of folks that want to buy an iPhone. Are we on the same page? Just want to make sure I understand what you're saying.
Yes, and why? Who precisely in the market? Who specifically in the market decides that? That seems a little ambiguous to me. I don't know who really decides what's the price of iPhone or something. Now, when we import things, I can understand that the importer wants to have a margin in profit, but really that goes back again to the value that we're talking about, the value that people determines. Now, do people really need to buy an, or may I, as the population, can I like enforce the importer to go and find another supplier elsewhere?
I hear you. I think just overall, right? Pricing is a strategic decision. If I sell iPhones, I can decide to come to Nigeria and sell at a loss. So sell my price below my cost just to get market share. I can also decide to come and sell at a premium. So every phone you buy, you pay me more than I can even make in terms of the sales price. So price alone is not really to make a profit. Price determines the strategy of the company in that market. So many times you make a loss, like the Chinese would do. They would come into a market, make a loss, get market share, kill the competition, then produce and then make back their profit. They think long term. So in a way, I'm agreeing with you. I'm just saying we can't really look at the pricing per se. In the end, it is the consumer that would say, we want to pay a premium, we want to pay a discount for this, because they are the ultimate guys that are correct. So if you bring in a product and the consumer say it's too expensive, they wouldn't buy it. So consumption falls, you go back to your drawing board, you reject, and you come back to the market. But I think I understand that part of the question you're raising. I don't know if there are any specifics for Doctor. Doctor, do you have any?
Yes.
Yeah, go for it.
Yes, I think he made a very important point. In fact, this point was so important in my research that I looked at it extensively, which is on the value chain. So my conclusion was that, I think that's for my PhD work, what I concluded was that any industrial policy or industrialization agenda for Nigeria in particular that does not prioritize investment in production of intermediate inputs locally and that does not prioritize exports is dead on arrival. Because what we've seen over the years is that many companies that are in Nigeria, whether it's Unilever, Diageo, and all of those big multinationals, the main reason they came to Nigeria is to take advantage of the local market, right? Because there's this Africa rising, Nigeria rising in the 2000s, and so demand was projected to increase over time, and so their effort was just to see how they can take a share of that demand, and they invested in Nigeria. Many invested before the 2000s and the likes. But the point is, we've gotten to a point where that strategy has to change if those firms must survive. It's not only about looking in Nigeria or looking at the Nigerian market now. It has to be Unilever and the likes and all of those big firms looking outside Nigeria. Because the moment you channel your effort to the Nigerian market, you cannot earn that much FX. And you then get into a troubled situation where you are subject to the price of oil volatility. You don't have enough savings for FX and all of that. That's one. So you have to earn FX, so you have to export out of Nigeria to create some buffers. And that's one. And many of the companies, if you go through their annual report, Dangote, Cement, and the like, in fact, many of them are now starting to look outward to say, look, we're not just here for the Nigerian market. We have to see how we can tap into the broader African market. And that's where I think industrial policy and government support is now needed to support these firms, not just the larger firms, but the medium and small scale firms to look external, while still, of course, seeing what they can get from the Nigerian market. it's better for those companies and it's better for the Nigerian economy, and it's a way to diversify and earn effects. Now, on the other part, in terms of local production of intermediate input raw materials, so if you notice, anytime there's a foreign exchange problem, those firms run into trouble. Why? Because most of their input comes from abroad. So they import almost their input. So I was even, in fact, one of the things I then argued is that we all know Nigeria's economy is import dependent, but our manufacturing industry in particular is import dependent. We think we are producing goods, but most of the inputs we get are from abroad. And so, even with Dangote refinery, as much as I am very optimistic about that project, if Dangote keeps importing crude oil to, process in his refinery, there will be problems in Nigeria, in the sense that I don't mean riots, I mean economic problems. We are not out yet, because he will not be able to maximize the returns that he has. So, and crude oil has to be priced in naira, for these firms. So, for me, that supplies to companies, intermediate production. We're looking at things like base oil. I've talked about, the cobalt, industrial starch, all of those things. We need companies that will be able to produce those inputs at a large scale to supply the manufacturing firms in Nigeria. So I was speaking to, I've said this many times, permit me if you've heard me say this. I was speaking to some of the directors of these large firms in the course of my work. And one of them sat me down and said, look, we have industrial starch. The demand for industrial starch is somewhere around 600,000 metric tons every year. Nigeria can only meet 10% of that produced locally. Majority of it is imported, from other countries. Now, imagine importing 90% of your raw materials to service your manufacturing. Why will price of manufactured goods not go up? It will, because you are subject to FX, especially now that we saw devaluation or, depreciation, whatever you call it. So you are subject to FX flows, and that affects your ability to even stay in the country, to survive, to grow, and to create more jobs. Now, Nigeria is the world's largest producer of cassava. You need cassava to make industrial starch. You need cassava to make gari. Our farmers would prefer converting that cassava to gari rather than to industrial starch. So, an industrial starch is more profitable, and there's, huge demand, growing demand. These companies are saying, look, we need it for so many uses, food, medicine, all of those things. So who is then investing in converting that cassava to industrial starch for the companies to get? Now, that's where that value chain part of it is where it is very, very weak. In fact, there are only just very few firms that do that. There's Sultry International in Ibadan and a couple of other firms, And so these companies, these manufacturing firms are saying, we need people to produce this thing in large numbers. There's demand. We are going to demand. We just keep importing, wasting money on FX. If we can get somebody to invest in that entire value chain, we don't need to import. In fact, some of them were saying we're doing backward integration. That why would we be owning farms? It's not our business. We're a manufacturing firm, but we're going to plant cassava. We're training farmers to plant cassava to meet. And he told me that when he went to Indonesia, one of the directors, he said those manufacturing firms, all they need to do is to place orders and say, look, we need XYZ thousand tons of industrial stuff. And they get it within a certain period, So because there's a solid value chain that supplies them, so it's easy for them to grow and focus on manufacturing itself, rather than going to buy farm and then you start planting and you are just doing it at CSR, you don't even know what you are doing, you are just confused. So, and it's just, industrial starch is just an example. This is the problem across so many value chains within, whether it's cocoa, whether it's, within the agricultural / manufacturing sectors. So that's where, for me, I think government and, industrial policy has to go in and say, look, how can we support investors? How can we create a new generation of investors that would take advantage of these opportunities? Because you are creating jobs, you are creating FX, you are reducing FX that would leave the country. You have the potential to export as well. And so this is value added. This is not just raw material and export. So there's a whole lot of, there are many benefits that we can get from unlocking those value chains, and that's where real development happens. So when I say investment-led growth model, that's exactly what I'm talking about. It's not about government releasing money and then constituency and everybody's buying keke for people and we borrow and we think we're doing development. That will not get us anywhere. Let's get our people productively engaged.
Gotcha. Well said, sir. Okay. Thanks for that. So we've got about 3 more to go. Let's get Cliff. Thanks, guys, for hanging in there. We'll get Cliff, then I think we'll get Oluwa. Yeah, Cliff, go for it.
All right, thanks, Carlo, and a wonderful conversation. So I have 3 questions. And the first question is just from what Doc just said now. It's